are too similar. For Nissan, it's desperate. For long-term vision, though, for Honda, potentially it's going to be good because they're the ones that are going to be in the driving seat.
What's interesting here is that the Trade Ministry of Japan actually first proposed this some 5 years ago. Nothing came to pass, but now with Nissan under further financial pressure, it becomes a necessary step to take. Elon Musk, this is another big story. He's always a big story these days, writing on X that the Federal Reserve is, quote, absurdly overstaffed.
He has a view on everything.
Yes, he does. And of course, he says this from his position as co-head of DOGE, right? Department of Government Efficiency, once January 20th comes and goes. Although this is not a clear-cut government agency. He doesn't actually have authority to do anything about this beyond talk about it.
That's right. This is just basically a task force. So he has a task force along with Vivek Ramaswamy. They're going to offer up ideas to Congress, but Congress has the power of the purse. What is so interesting about Musk, though, because I tweeted something the other day about something he tweeted, and someone said to me, I'm a U.S. citizen that pays taxes, and I tweet, why don't you care what I have to say? Well, because of his proximity to power, to President Trump, and also for the fact that he's going to be leading this task force. Even if it doesn't have the teeth and some of the capital would need to actually do the work, it is going to offer up ideas to Congress and to the administration. He took aim at the Fed, though, this time, something that President-elect Trump did recently, talking about how it's the easiest job in the world. I went back and looked. The Fed employs 24,000 people. Elon Musk thinks potentially he could, you know, scrap some of those people.
I like how even Elon Musk needs to play to what Donald Trump has already said, which is, you know, you mentioned that Trump made the comment about the Fed job being the easiest job, and Elon Musk was like, that's a good target. I'm going to target that one next. All right, Trump also threatening to reimpose U.S. control over the Panama Canal in a series of Truth Social posts, calling its shipping tolls ridiculous and saying that its sovereignty is not negotiable. The president of Panama, of course, firing back, as you'd expect, saying the canal is, quote, part of Panama and will continue to be. And a big part of this, Anne-Marie, as part of our theme, goes back to China, because China has a pretty big role here in the Panama Canal.
Yeah, Terry Haynes nailed it. China doesn't control the canal, obviously, though, through a Chinese company, has 2 of the 5 ports adjacent to the canal. Also interesting, China influence has been growing in the region. We've seen that. And in 2017, Panama severed diplomatic ties with Taiwan and declared that there was, quote, only one China. So potentially, this is actually Trump's concern about China's influence in the region, and less so about what's actually going on in the Panama Canal.
All right, we will continue to monitor these headlines for you, but we want to stay with what's going on in Washington, because the current administration, the Biden White House, is setting an ambitious pledge to cut greenhouse gas emissions over 60% by 2035. Now, whether that's feasible is obviously in question, with Donald Trump set to dissolve U.S. climate regulations. Tom Steyer of Galvanized Climate Solutions writes, 2025 is not about climate, it's about energy demand. Renewables should be at the center of new energy build, no matter your political persuasion. Tom, I'm pleased to say, joins us now. You're excited about the year ahead because of that idea. I'm curious, have you talked to anyone in the incoming Trump administration or of that party's persuasion that convinces you that they see things similarly?
Well, I haven't talked to anybody directly in the administration. I've talked to a bunch of Republicans in Congress and Republicans who are advising the administration. I would say what I'm seeing is what's driving energy is markets, costs, international competitiveness, national security. And those are things, there's going to be a lot of political talk. There is a lot of political talk. The words drill, baby, drill are, you know, renewed part of the American conversation. But what we're really seeing is the differential in costs. So if you look at renewables are cheaper now. If you're following where natural gas is, and we're talking a lot about the more demand for electricity in the United States and around the world, renewables are cheaper. What we're seeing is they're continuing to get much cheaper at the same time that natural gas in the United States, I don't know how closely you guys follow it, was $3.86 an MCF this morning. That's almost double where it was. And in fact, in Europe, natural gas is $12.86 an MCF. So when we talk about exporting liquefied natural gas to Europe, it's because we want to sell something that we can sell at $3.86 for $12.86 across the pond. Obviously, that's going to push the cost of American natural gas up. So when we really look at international competitiveness for the United States of America in electricity, when we look at it in terms of cars, what we can see is the markets, business, economics are driving us to clean energy. That's where we're going. There's nothing political talk can do about it. That's what the costs say. That's international competitiveness. That's how we're going to win.
Okay, so the cost structure that you believe will make the argument for us. Which industries are going to make that case to the White House, the incoming White House? Because they're looking at the energy industry, the oil and production and gas companies, and they're saying, you know, we're going to move forward. We're going to go explore and look for oil in all these different places, the Arctic, wherever.
For all the industries, including AI, that are demanding electricity, they're going to want the cheapest electricity because that's a huge driver of how they compete internationally. And the cheapest electricity is going to be renewable. That's true here, and it's true around the world. So when we talk about the idea about moving back to fossil fuels, the implication is somehow fossil fuels are cheaper. They're not cheaper. They're already more expensive. In 2023, 86% of new electricity generation in the whole world was renewable. They weren't doing it to be nice. It's all about international competitiveness and national security. The sun is going to keep shining. The wind is going to keep blowing, regardless of what political people do. So this is something that's going to be driven by business decisions. And honestly, I think the Trump administration will get behind it because that's what's going to drive American competitiveness.
When I talk to Republicans, they say that they just want the market to decide, and they're above all in for all energy across the spectrum. Do you think deregulation that this incoming administration talks about will help renewables as well, as much as it's going to help the fossil fuel industry?
There's no doubt about it. There is no doubt that
Why don't you think Biden didn't lean into that, some of that deregulation?
Well, I think he did lean into it, but I think that this is a difficult problem because it's a political problem. And it includes people on the left who want to make sure that everything we do in terms of siting and permitting is done perfectly. I think that the Trump administration, because they really want to permit new oil and gas drilling, are going to be pushing for faster permits and, lower oversight. And I think that if that goes to, including to renewables, what we're going to see is an explosion of low-cost, abundant, renewable energy. That's what we're going to see.
You say the U.S. is short energy next year. How?
How is that true?
Yeah, we're the biggest crude producer in the entire world. We have an abundance. We're a net exporter.
So if you look at, so let's talk about crude for a second. We produce 13.5 million barrels of oil every single day. We're the biggest producer of oil in the world. We're the biggest producer of oil in the history of the world. If we do everything that the Trump administration wants to do in terms of Alaska, opening up those lands, in more than 5 years from now, we'll go from 13.5 million barrels a day to 14. Give me a break. That's the big revolution, 13.5 to 14 in 5 years.
Incremental.
Yeah, no, it's hardly any change. And in the context of a world that uses 102 million barrels a day. So when you really look at what's going on in this world, we're going to have to produce a lot more electricity, and that's something which is going to come from renewables. If you look at oil demand, the developed world has already peaked its oil demand. China is going to be peaking its fossil fuel demand in 2027. That is not something where demand is going to be growing. Electricity demand is growing dramatically. Gasoline usage is either flat or going down.
3 Mile.
Yes.
Tech companies are now going after their own electricity. Do you think there's more for nuclear?
Look, the question in nuclear is simple. There's the question about toxicity, nuclear waste. There's the question about making sure you don't have a true disaster, which is what 3 Mile Island is normally associated with. And there's cost. And there are two kinds of nuclear, but we're talking now about fission, which is the kind of nuclear energy that we've been using for decades and that France uses so much of, and that we still use a lot of. The question with fission has been every time that people have tried to bring fission on in the United States, it hasn't been cheap. If you look at the last nuclear plant to be brought up, it was brought up in Georgia, and I honestly think it was something at least 4x the original cost. Very, very expensive energy. In fact, that's energy that is very expensive versus renewables that are very cheap. It's a little more, it's more complicated than that because you have to talk about baseload energy. But I'm just saying, if you look at nuclear energy, the promise has been there for a long time that it would be abundant and cheap, but they've never gotten it to be cheap.
So can these big tech companies get the energy they need from renewable energy? I mean, is there enough of that right now, or
There's no question there's enough. The question about electricity, and particularly electricity for AI, is it has to be available 24/7, 365 with absolute certainty.
no interruptions, no
And
breaks?
so the real issue here is how much base load energy, stuff that you can definitely call on at any time, do you need, and where's that going to come from? Can it come from batteries? Can it come from hydro? Can it come from nuclear? Can it come from fossil fuels? And can it come from enhanced geothermal? There are a lot of different questions. There are a lot of people with different answers. And, you know, everybody's trying and everybody wants to get baseload energy that's really cheap. And, you know, I have some opinions about that, but the proof of the pudding is going to be in the eating. Who can really produce it? How much can they produce? And can it be completely reliable?
All right, Tom Steyer is setting us up for a discussion that we'll be having for the years to come. Tom, appreciate your joining us today. Tom Steyer.
Great time to be here.
With Galvanize Energy. All right, let's get you an update now on stories elsewhere this morning and check in with Danny Berger for your Bloomberg Brief. Danny.
Thanks, Scarlett. President Biden is commuting the death sentence of 37 federal prisoners to life in prison without parole. According to a roster of pending death sentences, Biden's actions would leave just 3 inmates on federal death row. They were convicted of terrorism and hate-motivated mass murder. The president has now spared the lives of more federal inmates than any president since Woodrow Wilson. Rupert Murdoch's News Corp has agreed to sell Foxtel Group to sports platform DAZN Group, the deal that values the Australian paid television and streaming service at $2.1 billion. DAZN, backed by billionaire Len Blahnik, is a prominent player in the broadcast of live sports. And speaking of live sports, a thrilling upset in Washington after the Commanders stormed back for the last-minute touchdown against the Eagles. Rookie QB Jaden Daniels made up for a late-game interception with a clutch final drive to seal the win. That improved the Commanders' record to 10-5 and ended the Phillies' 10-game win streak. Elsewhere, the Vikings improved to 13-2 after beating Seattle by 3 on the road. That's your brief. Scarlett.
All right, and of course, more exciting football games to come later on this week. Up next, record-breaking holiday travel.
We're seeing an uptick in lodging, travel, experiences, which is also what we see in our consumer data. There's still strength there and still some dry powder.
What you need to know before you get on the plane for your holiday travels. That's next. You're watching Bloomberg Surveillance.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, can't say that in Bloomberg.
Maybe Moxie.
Yeah, Moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Under surveillance this morning, record-breaking holiday travel.
We're seeing an uptick in lodging, travel, experiences, which is also what we see in our consumer data. So people are spending on, memories. How do they take trips? We continue to see strength in the consumer in all cohorts. And, they are spending, and we've seen an uptick in holiday spending going into the holiday season. And so, there's still strength there and still some dry powder.
Here's what's happening now. Nearly 40 million people expected to pass through airports across the country this holiday season, up over 6% compared to last year. That's according to the TSA. Joining us now is Clint Henderson of The Points Guy. Clint, it is good to speak with you. Anne-Marie and I are in the office because it is a Monday and we still have 2 days to go before Christmas. Talk a little bit about the calendar effect, because with the holidays on Wednesday this year, it means there isn't a natural long weekend for people to take, and maybe that spreads the travel out a little bit here.
Yeah, that's certainly helping. Interestingly, though, the Sunday after Thanksgiving, we saw the highest single day ever. So that didn't really impact Thanksgiving travel, and we were expecting record-breaking crowds. I will say the airlines got through the busiest part of the lead up to Christmas fairly well, despite a few storms. So that's good news. And I do think the airlines in general are in better position. They're staffed up. They have the planes they need. They have the people they need to get things moving quickly. And they seem to be able to recover from storms better right now, too. So barring a major storm like we saw in 2022, fingers crossed we'll get through the holidays with flying colors.
Yeah, so far no major storm at the moment, and also good news, no shutdown either, so everyone can get through airport security the way that you would expect them to during a busy holiday season. People are obviously traveling to visit family or go home, but they're also going away on vacation. Where are they going to, Clint?
So it's really interesting. We've seen the usual suspects are obviously very popular. Los Angeles, New York has been going through some incredible record-breaking crowds. The big cities in the U.S. and also places like Florida and Cancun. But we're now seeing really interesting data that suggests Americans are going much further. They seem to be being inspired by TikTok and Instagram to really get out there and have a little bit more exotic travel. Tokyo is actually one of the top cities, according to Chase, this year for international travel, which is really interesting. The strong U.S. dollar is certainly helping. I think that's going to really push up numbers in Europe as well, since the euro has been falling lately. So look for some international bargains. I just booked myself a trip in January to Portugal. Incredible what you can get because the U.S. dollar is so strong right now. So, and then don't sleep on shoulder season travel. A lot of people are traveling now well into winter, and then of course for the shoulder season, which we love, which is spring and fall, and people are spending longer away. That's a new survey we just did. Found people are spending 5.5 days as opposed to 4.5 days like they used to. So people are going further and they're going for longer.
Why are they spending longer? Is that they feel that, is it the strong U.S. dollar? They feel like their money can stretch them that much longer on a trip?
I do think that's part of it. I also think people are really into experiences now, as your soundbite alluded to. And I think the other interesting thing is people can work from home now. So they're tacking on a day or two to business trips that they might not have in the past because they have to be in the office. So, you know, you're in the office today, but I'm able to work from home. And I think more and more people have been able to do that. So you're seeing the amount of time they're spending away stretched a bit.
Clint, any viewers that are preparing to travel this week, what's your number one tip?
Have the airline app installed on your phone. Not only is that how you're going to get Wi-Fi, entertainment on the plane, you can track your flight, see if it's on time, see where your plane is coming from. And finally, that's where they're going to offer you cheap upgrades. So you beat out elite travelers like me so you can get a cheap upgrade to first class. So who doesn't want that as a Christmas gift?
I love that. What about luggage? That's a big issue here, and I know that this might sound kind of trivial, but you know, we're all trying to get by bringing it on as a carry-on, and yet when you get to the airport and you're at the gate, they make you check it in anyway at the gate. They say, oh, we'll waive the fees, but that's, you know, everyone's trying to avoid that scenario. Any advice on that front?
Yeah, you know, I'm team carry-on, so I hate checking baggage. But during Christmas, when I come from New York to California, I bring presents with me, so I do check bags. And you know what I got? An Apple AirTag for the first time in my life. You know, we've been writing about this and talking about it for years. My team loves it, but it's the first time I've used it, and that is really cool. And now with the AirTags, some airlines allow you to share the location with the airline, so if your luggage gets lost. So maybe I have to look more into checking luggage in the future and try not to be the last to board, pay for that extra seat, get the airline credit card so you can be among the first to board that plane.
Talk your book. Clint Henderson of The Points Guy, thank you so much for joining us. Really appreciate it. Coming up, we've got Dana Dioria of InvestNet, Jonathan Miller of Miller Samuel, and Neela Richardson of ADP, as well as Vishal Kanduja of Morgan Stanley Investment Management, a veritable lineup of experts to take you through the next hour. You're watching Bloomberg Surveillance.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared than in dealing with him again.
probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Data on inflation have been coming in a little slower. I wouldn't even say sticky or stalled. I would say the progress has just slowed.
The Fed has to reiterate its commitment to its inflation target.
I think the market at every step has been worried about inflation and has been rejecting these moves by having yields go up.
It's really about the bond market. So effectively, where people are starting to get nervous is from a positioning standpoint.
Big question to me would be how high can these yields actually go?
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning on this Christmas Eve from New York City for our audience worldwide. This is Bloomberg Surveillance alongside Scarlett Fu, Anne-Marie Hordern. Scarlett, thank you for keeping me company this morning. You're not used to, again, I feel like the 3 a.m. wake-up calls, so
yeah,
thank you so
I
much.
woke up at 2 a.m. because I had to make sure that I was fully awake and ready to go.
Well, we appreciate it, especially as we are on the shortened holiday week. Torsten Slok just published something. Thank you, Torsten, for working as we are as well. You're one that's continuing coming into the office and not taking an early, cheeky holiday. Tariffs coming. He points out the risk to global markets in 2025. Tariffs coming at 90%. That's number one. Number two, NVIDIA earnings disappoint inflated expectation, 90%. And the U.S. economy reaccelerates and animal spirits come back. 85% chance.
Yeah, it makes for a pretty volatile 2025, doesn't it? The U.S. economy will continue to grow, and that's perhaps the issue because inflation is going to be the bugaboo. And he goes on to say that, and he's been kind of out front in saying this, that he thinks that there's a chance that the Federal Reserve actually raises interest rates in 2025. We know that last week they revised their projections to only cut rates 2 times instead of 3 times. Now Torsten Slok is talking about tightening policy.
Right, that's right. Number 7 on his list. Fed raises interest rates in 2025, 40% chance. Adam Posen has been talking about this at the Peterson Institute for a while as well. How much of this is because of fresh policies coming in from the Trump administration? It goes back to his first point. The tariffs are coming. Are they going to be inflationary?
Tariffs are coming. We don't know in what form. We don't know exactly how much. We don't even know which country they will be imposed upon because every day it seems to grow, right? Panama is being kind of the latest one to get caught up in the mix. Mexico, Canada, China, of course, the EU for not buying enough U.S. oil and gas. It just continues.
Possibility. Okay, coming up this morning, Dana Dioria of Envestnet as stocks look to start the shortened trading week higher. Jonathan Miller of Miller Samuel on the housing state of the housing market heading into the new year, and Neela Richardson of ADP on wage trends to watch in 2025. We begin this hour with stocks higher, investors waiting to see if markets can clinch a Santa Claus rally to end the year on a high note after paring back major Fed-induced losses. Dana Dioria of Envestnet saying the Fed delivers the cut with a but. January is more than likely off the table for another cut and going into 2025. The base case should not be more than another 50 basis points. With the potential for inflationary policies next year, why potentially ruin everything just to squeeze another couple of rate cuts into the cycle? Dana joins us now. So Dana, you basically are recalibrating after the Fed recalibrated. Is that fair to put it?
Well, I think it's definitely a recalibration, although I'll say that I think the market has overshot all year. So I wouldn't say I was recalibrating as much as the market has been. I mean, we've gone through a year of market just kind of overshooting on its expectation of Fed cuts. And that was happening in spite of, market being great, unemployment being great, no reason to think that even, GDP was in danger. So it's not surprising that, of course, we kind of came into the end of this year with higher expectations for next year than what the Fed has in mind. And it's not surprising at all either that, the Fed is going to give itself some room to breathe. I mean, we're getting towards the end of this rate cutting cycle. Doing it every single meeting probably didn't make a whole lot of sense anyway. And of course, as you were talking about just earlier, there's a lot of uncertainty as we go into 2025, right? Around what's going to happen on the fiscal side, tariffs, what's going to happen with inflation. And if there's anything that the Fed could do that this Fed would consider a fail, it would be to let inflation take hold again. So it really shouldn't surprise anybody that we're probably going to skip January. And when I say base case going in at 50, look, that's kind of almost meaningless, right? I mean, that's your base case today, knowing what you know now. But really what has to happen is we have to see all of the data that's going to come in 2025 and determine what we're going to see through the course of the year.
It's a good point, and it's fair that you say this. Remember, it was this time last year, it was going into 2024 that the market was expecting at some point 6, 8 rate cuts. We ended up getting just 3. Torsten Slok, as Scarlett Fu and I were just discussing, talked about the fact that Fed raises interest rates in 2025 maybe at a 40% probability. This is one of the risks he writes down. Do you think we could see hikes in 2025?
You can't pull it off the table. I mean, again, that's not a base case from my perspective, but you certainly can't pull that off the table because of the fact that the Fed will fight hard to keep inflation down. So now, look, we had a decent reading on Friday, right? I mean, we don't necessarily have reason to think that inflation is rearing again at the moment. It's not coming down as abruptly as it was. The Fed wants to, of course, they want a 2 handle, right? Like there is to a certain extent some, ambiguity as we go into 2025 about what inflation actually is going to do. So I would say a rate hike is not the base case, but if you saw inflation coming back, I don't think the Fed could afford to hesitate to try to tamp it down, especially if it's coming back because, they're combating what's going on the fiscal side. They're combating inflation that's being created by tariffs, by decisions around immigration, things that are just out of their control. They've got the one hammer. They're going to have to use it.
Yeah, well, that mix of concerns is what is keeping yields, especially on the long end, elevated. And there's increasing talk about a 5% 10-year yield, maybe even 6% if you believe T. Rowe Price. Not to hammer on what Torsten Slok has been predicting, but he does talk about the odds of a 10-year yield above 5% before mid-year at 40%. If that were to happen, and he's not the only one predicting this, what does that mean for different parts of the stock market, whether it's the S&P 500, the NASDAQ, and the Mag 7, or small caps?
Yeah, so I mean, we know that higher for longer and higher rates in general are not good for areas of the market like small caps, right, that are interest rate sensitive. And there's an assumption there too about what happens with the rest of the curve, depending on tenure. Obviously, very bad for real estate. Small caps much more interest rate sensitive because they're dependent on going back to capital markets for money. And so if we have this situation where rates are higher, and then of course stocks in general, right? I mean, when you're talking about a 10-year that's hitting 5 and north of 5, this is going to impact everybody to a certain extent. I think Mag 7, these big tech companies that really aren't dependent on capital markets, they're very much cash funded. Those remain the defensive, quote unquote, plays in a case like that, right? Because you can hide out there and they're not going to have that impact. But as a general rule, the systematic market overall risk is going to rear its head if you're seeing 10 years north of 5.
Yeah, and we look to the Mag 7. They've certainly seen a resurgence over the past couple of days, and this idea that you have a broad market rally being a more durable rally than one that is on narrow breadth, and that's certainly what we've been getting more and more. How do you think through leadership rotation with positioning for what people expect a president like Trump to do when it comes to the tech sector, the healthcare sector, or anything else?
It's interesting, right? Because, there was such a very clear codified Trump trade as we went into the election. And look, if you traded around that And Trump, obviously Trump won. You made money on that, right? Because the short-term impact was quick, priced into the market like, oh, Trump winning, this is great for financials, the pharmaceuticals, right? And then he has a pick RFK that now all of a sudden is, well, this isn't so good for big pharma. You were just talking about earlier how it's very hard to tell where in the market, Trump is going to potentially want to levy some tariffs. And so again, going into the election where everybody kind of thought they knew what he was going to do, you could trade on this. But coming out of the election, number one, you have to predict where he's going to go, things he's going to do that may offset your earlier predictions. But you also have to, in a market now where it's known that Trump is the president, you have to sort of outsmart the market's collective price around what those things are going to do. So it's not only figuring out where he's going to go and what he's going to kind of do, but it's also then saying, do I know more about what I think Trump is going to do than the rest of the market? Because the rest of the market is already pricing that in. So I think trying to rotate based on, some assumption and forecast around what Trump is going to do is very, very difficult now. The big win was just that sort of binary, did he win the election or not win the election?
Terry Haynes joins us in the last hour, and he said Trump burned up some market credibility last week when it came to the whole shutdown drama. We entered this week not having a shutdown, but it definitely took a lot of work in terms of Speaker Mike Johnson having to really corral his party to get this over the finish line. Do you agree with Terry Haynes? Do you potentially think Trump, burned up some of this market credibility in this short instance?
Well, I mean, the shutdown didn't happen, right? And I think memories are short. I wouldn't say the shutdown per se because it didn't happen. And I think, the overall outlook's going to be, hey, they pulled it out, right? And how much Trump had to do with that or didn't have to do with that is, kind of can be a behind the scenes. I will say, though, that what I think, and this is pursuant to what we were just talking about, it's hard to predict what Trump is going to do. And so I think from the perspective of a market that doesn't like uncertainty, doesn't like to have to price in maybes, or I think it's going to be great for Bitcoin, and then, something happens where, the Fed decides, hey, we're not actually going to lower rates as fast as we thought because Trump's policies are inflationary. I mean, I think the credibility less than just trying to predict what's going to happen here, I think the market has, a little bit of unease around that. And that is going to be the case.
Do you think Bitcoin is going to be the asset that really follows Trump policies? You write in your note, Bitcoin haters feel the pain.
Yeah, I mean, certainly, what we've seen, and notwithstanding last week, but what we've been seeing, of course, since the election, and Trump really, drummed up his interest in crypto. He was going to be, kind of the best president for crypto. So I think that is one way to look at it. But crypto is a really risk-on asset, very volatile. And again, could be just the vagaries of the market in general can drive crypto, and that might not even be specific to Trump's policies. So I don't know that I think there's one asset that you can really track and follow based on, Trump. But I do think Bitcoin as a very risk-on asset sort of tells you what the general zeitgeist is at the moment.
Dana Dioria, thank you so much for joining us this morning on your holiday week. Dana Dioria of InvestNet. We thank you. Let's get you an update on stories elsewhere making news this morning. Here's your Bloomberg Brief with Danny Berger in London. Hey, Danny.
Hey, Anne-Marie. Prime Minister Benjamin Netanyahu said Israel will act forcefully against the Houthis. Over the weekend, a missile fired from Yemen struck Tel Aviv. Netanyahu called on Israeli citizens to be patient, saying that it may, quote, take time. Apple is considering challenging Amazon's Ring. The company is working on a smart doorbell that will have advanced facial recognition that wirelessly connects to a deadbolt lock. The idea being that the doorbell could automatically unlock the home for a resident by scanning their face, just like Face ID that lets them into their iPhone. And in sports, a thrilling upset in Washington after the Commanders stormed back for the last-minute touchdown against the Eagles. Rookie QB Jaden Daniels made up for a late-game interception with a clutch final drive to seal the win, improving the Commanders' record to 10-5 and ending the Phillies' 10-game win streak. Elsewhere, the Vikings improved to 13-2 after beating Seattle by 3 on the road. That's your brief, Anne-Marie.
Thanks so much, Danny. Up next, the morning calls, plus Jonathan Miller of Miller Samuel on the state of the real estate market in 2025. That's coming up next. You're watching Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
All right, let's take a look at how markets are faring right now. With about an hour and 15 minutes to go before trade begins in the cash market, you have futures mixed at the moment. S&P 500, little change, modest gains there. Euro dollar, that's been a consistent weakness for euro. Anything that's trading against the dollar for that matter.
I go back to what the points guy said. How much strength do Americans feel like they have right now using this dollar around the world?
Seriously.
They're looking for deals elsewhere, whether that's in Europe or whether it's in Japan.
Go to Europe, go to Japan. Treasuries, we're seeing a little bit of declines there in yields. And of course, that's been on the back of, declines in price, move higher in yield. The red arrow always confuses. The red up arrow, I know, it gets me each time. Nevertheless, the theme here for Treasury yields is that they have been rising, and that has not stopped. New York crude down 0.5%. Still plenty of supply around the world, Anne-Marie.
And a lot of spare capacity, as to what Amrita Sen had to say. So even if there's not a ton of that glut right there, the fact of the matter is there's two countries sitting in the Gulf that could turn on the taps almost immediately.
Good point. All right, let's stay with yields and rates and turn now to real estate, because a challenging market is expected to continue in 2025 thanks to higher mortgage rates as well as limited supply. Jonathan Miller of Miller Samuel is staying optimistic. He says, while we don't expect sales to rise to normal levels, they will be higher than last year. Those who can afford to buy at higher rates will probably do so. Mortgage rates will probably end up lower than they start the year, but not low. Jonathan joins us now. So, Jonathan, you have actually noticed an uptick in existing home sales, in particular in high-end markets in places like New York.
Yes, that's actually been the story. If you think about it, many potential home buyers have been waiting for about 3 years since the initial Fed moves. And I think time is sort of running out for people as life moves on. We're already seeing in contract activity in some of the markets that we cover really begin rising back in the summer, not just after the election. But of course, on the national front, existing home sales for the last couple of months have been up, which means that, with all the sort of people waiting for lower rates, I still think there's a thinking that, perhaps a year from now, rates will still be a little bit lower, and those that can afford to buy are buying. The challenge is supply. Supply continues to be a problem. It's less of a problem in the Sun Belt states where there's been a lot more development activity, but still, a year from now, I think housing prices are going to be higher than they are today, and so you have to sort of, make the decision of, do you wait for rates to come down at some point? If they will, it doesn't feel like it with the incoming administration's economic policies.
So you mentioned the Sun Belt and this idea that it is rising, the inventory that's available. People point to that and say that they want to move to somewhere where perhaps housing is more affordable. But it's misleading, though, when you look at supply increases as well, because we're coming off a pretty low base. How often is it that people go over and realize actually the picture here is very different from what they had anticipated? And if you compare it to, say, 5-10 years ago, it's completely different.
Yeah, I think post-pandemic, there's still an expectation by consumers when they go from, say, the Northeast or California to the Sun Belt that they're going to get a very low price, and the affordability is going to be dramatically improved. However, that's been where a lot of the price appreciation has been concentrated. As people with work from home are looking at other places to be situated. One of the things that we're seeing in, for example, markets like Florida, especially South Florida, is that the higher end threshold, meaning pricing north of, say, $1 million, not to be cavalier about the numbers, we're seeing a tremendous uptick in activity. Perhaps that has more to do with elevated financial markets than it does to the factor of higher mortgage rates.
Jonathan, given the fact that there are higher mortgage rates, are there deals to be had on the price when going out and buying a home?
I think the simple answer to that is no. But that's because even in markets where inventory is rising or there's parity with pre-pandemic conditions, the demand is still pretty strong, that people have been kept on hold for several years. So we're still seeing bidding wars. We're still seeing a fairly tight market. We're just not seeing a lot of discounting going on, and I think that's what consumers were hoping for.
You expect an uptick in 2025. Where exactly do you think we can see an uptick in some of this?
Well, the basic math is where the inventory is the tightest, that's where you're going to see the most uptick in price. I would say that the biggest uptick in price is not going to be in the Sun Belt. It's going to be to the north of that, because that's where not as much new product has been built to come into the market. That's one of the challenges in markets in the Sun Belt, is that there's been more new construction as developers are anticipating the boom coming off the pandemic, and it's been a little bit overdone.
Jonathan, we talked about single-family homes. What about multifamily homes, with the idea that mortgage rates will be lower at the end of the year than where they start, but not low by anyone's measure of what tends to count as low? How does that affect the decision to rent versus buy? And what does that mean for those who do own or are looking to buy multifamily properties?
Well, one of the problems that we've had in the multifamily, particularly in the condo market, is that housing prices, have risen just like single family quite a bit, and affordability is being challenged. The problem is in the multifamily, there's more supply or excess supply, which means potential softening or more potential softening. So from a single family perspective, I think it's a little tougher to get a deal. In the condo, maybe a little bit more, but not in the high end market. We're talking about more normal priced property. I think we'll see less price growth because supply is not as excessive as many consumers were thinking.
Okay, and moving away from residential property into commercial property, there's been a lot of discussion about an incoming Trump administration being good news for real estate overall, but in particular commercial real estate, especially with transactions picking up pace, or at least conversations about transactions picking up pace. Are there numbers that bear this out?
So the way to think about commercial, and the part that I still am amazed, because the narrative about commercial is, hey, it's coming back. It's, work from home maybe is going away, because we're seeing, various firms talking, ending work from home or severely reducing it. But really, the conversation is almost entirely about Class A. If you think of commercial office as Class A, B, and C, A is doing just fine with relatively high occupancy and relatively stable and elevated leasing prices. It's a best in all the rest scenario. Class B and C are still being punished by the work from home phenomenon. And, many of my colleagues, including myself, believe that work from home is here, structurally for indefinitely, and that's where the opportunities are. In fact, we're seeing a little bit more on the B and C. We're seeing more residential, office to residential conversion activity, which is difficult in high interest rate environments, but we're still seeing it beginning to occur. So I think that's where the upside is in the Class B and C. It's not going to be sort of leasing up at normalized prices.
Yeah.
One other point about that is a lot of the B and C, the problem with high vacancy in those markets is that the landlord can't reduce their prices to market level.
Yes.
And that is a condition that has stayed since the pandemic era.
Right.
And I don't anticipate that changing in the near term.
All right, Jonathan Miller of Miller Samuel, thank you very much, and happy holidays to you.
My pleasure.
Sir. Coming up next on Bloomberg Surveillance, we've got Neela Richardson of ADP and Vishal Kanduja of Morgan Stanley giving us their take on the labor market and the financial markets, especially the move up in rates. This is Surveillance.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
we're just about an hour from the start of Cash Open this morning. It is the final week of 2024, and this is what we are seeing across the trading markets. Obviously, volumes are going to be light. Most people are either at the airport, already home for the holidays. S&P 500 futures are flat. Last week, they closed down on the week. NASDAQ futures, though, up 0.4%. We are closing out the year, though, with the S&P 500, Scarlett, up more than some 20% this year.
And it's remarkable because if you look at the different indexes and how they've done, the NASDAQ has led the way, and we're going to end the year with the NASDAQ leading the way as well. So that rotation into small caps, it had its moment. I'm not sure if it's over, but for now, people are going back to the safety of big tech.
Right, and potentially could it come back maybe once they see the actuality of Trump's policies, not just what they're trying to, wishful thinking into Trump 2.0 in 2025. Across assets, what we are seeing as well in the bond space, Scarlett's been talking about it, just this theme of rates will be going up. They will be going higher. Right now, the 10-year yield, 4.5%. We do have an auction today. I sound like Lisa Abramowitz now. At 1 p.m., a 2-year bond auction. But you brought up T. Rowe Price earlier. They're talking about potentially 5% on the 10-year yield. How much more difficult will that make policymakers' jobs in Washington, D.C.?
Yeah, it'll be complicated. It'll also raise the cost of servicing our debt tremendously,
which is already
we can ill afford.
And it's already a huge part of the budget.
Yeah, absolutely. And it's something that all the government officials will be taking a closer look at, especially since we have an incoming Treasury Secretary who's fixated on our debt levels. Yeah, T. Rowe Price talking about not just 5%, but even 6% potentially. I mean, it's an outlier, but it's out there.
At some points, 5%, 6%, that is going to take a huge bite out of the stock market. And then, of course, in currencies this morning, strength of the U.S. dollar. That has been a theme of late, a theme for 2024, this idea of U.S. exceptionalism. But look at this. Euro dollar, 1.0394, sub 104. As many analysts, Jeff, you talking about parity going into next year. The points guy earlier today, as everyone is traveling, saying foreign travel is more attainable now, and it's more exciting to Americans around holiday time. They're going to Japan. That's one of the top 5 destinations on the Christmas list. How much of that is because of the strength of the U.S.
I'm sure it's part of it. If you want to go skiing, let's just say in Utah or Tahoe, it's going to set you back, what, $150, $200 for a day pass to go skiing if you don't have Epic Pass or one of those, programs. If you go to Japan, yeah, you have to pay for the airfare, but once you get there, things are more affordable than they are here.
That's on my bucket list, actually, skiing in Japan. Can't wait to do it one day. All right, under surveillance this morning, the Biden administration launching an investigation into Chinese-made semiconductor chips. The inquiry focusing on foundational chips, common across a wide range of industries. The move teeing up potential tariffs on the sector from the incoming Trump administration. So passing of the baton when it comes to China. And basically what this would mean is that the Trump administration would need to pick this up. But this is one area where you see both parties really agree on, and that's talking tough on China.
Absolutely. And, if the incoming administration were to take up the action, this would be a Section 301 investigation, the same action that Donald Trump used in his first term of office to impose tariffs on China. The U.S.'s take here is that China has expressed this ambition to dominate the global chip market, and it unfairly subsidizes that industry. So the U.S. needs to take action immediately. The fear is that China will flood the market with really cheap chips and, make it so that it's uneconomical for anyone else.
And the head of 301 is going from Catherine Tai to Jameson Greer. This is someone who's basically a mini Lighthizer, as maybe you'd want to call it. And when he gave a testimony to Congress this year, he talked about decoupling from China. So you can obviously expect, I think, the incoming Trump administration potentially take up this provision. Also under surveillance this morning, in corporate news, Honda and Nissan taking their first steps towards a merger. Really, all of this is about China as well, signing a basic agreement for talks. A holding company will be created to house the new entity and should be listed by 2026. The merger would create one of the world's biggest car makers competing with Toyota, and there it is, Chinese automakers. How much more consolidation potentially are we going to see in this space because of that, because of China, and how cheap and efficiently China can pump out an EV? you can get a Chinese electric vehicle for $10,000, $12,000.
Yeah, and there's a reason why we haven't seen it in the U.S. because it would put U.S. automakers out of business if that were to come in. Not that that's even a possibility right now, given the tariffs that people have talked about. But yeah, this is a big issue because Nissan has lost a lot of market share in China. A stronger Honda with Nissan may blunt some of that market loss. And at home, they need to compete more efficiently against Toyota.
That's right. Also, this morning, Apple considering challenging Amazon's Ring. The company is working on a smart doorbell that could automatically unlock the door by a home's residents by scanning their face, just like Face ID lets them into their iPhone. What do you think of this? More tech?
More tech, but on Apple's terms. So Apple has this play that it always goes to consumers, which is that we take privacy, your privacy, more seriously than the other big tech companies. And I think this plays on that idea that you can be secure in knowing that whatever video is recorded on, in front of your door will be safe on our cloud versus the other big tech companies.
A lot of apartment buildings actually are retrofitting so that you just have to show your fingerprint, kind of like the Bloomberg terminal. And they just have to show your fingerprint, you can get into your home. But I guess this would be easier, showing your face.
Showing your face might be a little bit easier. I mean, this is also part of Apple's ambitions to own the smart home space, or at least get into it. It's been a little bit behind, it's playing catch up. Certainly, Amazon has done a better job, Google has done a better job as well.
Okay, turning to the U.S. economy, new home sales and Conference Board consumer confidence data due later this morning, with this year's last round of weekly jobless claims ahead on Thursday. Joining us now to preview is Neela Richardson of ADP. Neela, you have a piece out talking about what you're looking out for the labor market next year. What's your top concern?
Pay growth. And it has to be Goldilocks, Anne Marie. If we're looking at the one thing in the labor market that we want to be confident in, is that wages are going to grow high enough that consumers can keep spending resiliently, like we've seen, but not too high that we trigger inflation. So we've actually seen pay growth level out at higher levels. And in ADP's own data, we saw pay growth for job stayers increase for the first time in 25 months. If this continues in 2025, it makes the job of the Federal Reserve in tapping down inflation that much harder.
So do you think the Fed was actually right in some of the language that they came out with last week?
I think they are right to be cautious and to be wary of inflation ticking back up. Now, they've got some good news with the PCE on Friday. The month-over-month looked promising. Hopefully, that continues into 2025. What I'm saying is that wage growth is that bridge between the labor market and inflation. And if wages continue to be at higher levels, it doesn't mean that they can't get back to 2%. It does make it hard to stick at 2% for an extended amount of time. I think markets are overly concerned about hitting 2% that one time. I think we really need to focus on the long-term trajectory of inflation and what role wages play a part in that.
When we talk about wage growth, are we talking about high-end salaries or salaries at the lower end, hourly workers, for instance?
They're two totally different things. And it's great that you highlight that because we've been looking into both really high-end salaries and hourly workers. I'll start with hourly because they're 60% of the labor market. And what we've seen is that hourly workers are working less. So yes, hourly salaries are growing, but hourly workers' annual pay, when we talk about the entire 12 months, they're actually seeing less pay growth, not more. And on average, that's 2.8% pay growth for hourly workers over a course of the year. You match that with inflation, you get an hourly worker that's barely treading water. And that is not good news going into 2025 for lower paying jobs. And so this economy is being supported by a lot of high net wealth individuals who've seen house prices go up, stock prices go up, and wages. So on the other side of that, less than 1% of workers are making $500,000 or more. But still, that's over 1 million workers who have these exorbitant salaries. And they're in every metro area, they're in every industry. You're seeing really high-paying jobs.
That's fascinating, and it really goes to show how when we look at wage numbers in the aggregate, it masks so much that's underneath the surface. We were talking with Jonathan Miller of Miller Samuel earlier about the outlook for commercial real estate and how so much of the office building outlook depends on work from home versus remote work versus return to office and how many days people do go in, and therefore how much companies commit to the commercial real estate. There seems to be an accepted compromise that if you're going to work from home or have remote work, you will take lower pay. What do we know about the lower pay? How worth it is it to those who seek to stay at home? I mean, what is the number that turns it for them?
You know, we've seen housing affordability be a big part of labor markets.
Yeah.
And so this remote work, as it became more prevalent, it was an opportunity for workers to move to low-cost areas. And so what we did at ADP is we dived into the data when we looked at the same employers, the same teams, to see what remote workers were making relative to their teammates. And we found that they're actually losing about 3% less on year than the rest of their teams. But they're actually benefiting because they have such lower cost of living that on net they're doing better. So it's almost like a cost sharing between the employer and the worker. When employers, and we looked at this too, go to those same areas, those same low-cost areas, they still pay less than the workers that moved there a year ago. So there is some sense of cost sharing between the employer and the worker, and that's because of high housing costs. So high housing costs, the takeaway here is it invades the labor market and it causes us to do different things with our time and our location than we otherwise would.
So remote workers find the lower pay worth it?
Yes.
And
right now they are.
And this trend, do you think will continue?
I think there's incentives, but your guest just said that he expects high housing prices to remain with us and actually climb higher. And so what's unique about where we are now, high house prices used to just be a coastal phenomena. Now there's really no strong labor market that you can turn to and not see high house prices. So where are those low-cost areas going to be? Are we going further and further remote to get that cost of living decrease? That's the question.
Do you think work from home as a phenomenon is going to continue? Do people feel the need to go back into the office, especially if they want to rise the ranks of a company? How do you do that remotely?
How do you do that when you're Gen Z? How do you learn how to work without actually stepping into an office? Now, most jobs you can't do remotely. So this is a...
Yeah, Scarlett and I can't work from home.
Maybe you tried it at one point.
It was terrible. Never doing it again.
Yeah.
Out of necessity, and then we moved on.
Yeah.
Yeah. Yeah, I actually like coming into the studio too. There's benefits from being together. Yeah. Now, do you have to work every day in the office? Well, you guys do. I don't. And so there is a sense that hybrid work is a good compromise for some jobs, but not every job. Teachers, nurses, doctors, there's plenty of jobs you can't do that. But the big question is, will compensation change, evolve, because some people have this remote option and some people don't? Will you get paid more in 2025 for coming into the office every day? That's the question.
What is the biggest risk in your mind to wages in 2025?
I think hiring. It's always going to be the risk. We're seeing a slowdown, a stabilization in the jobs market. And this is a market like every other market that is influenced by uncertainty. So if you're not sure about the outlook, if you're not sure what the Fed is going to do or what tariff policy is going to mean for your business, then you might change your hiring plans. You might kind of adopt this wait and see mode. And that will also influence the compensation that you have for new workers and for promoting your existing staff as well.
Neela, thanks so much for joining us, especially on this holiday week. Merry Christmas, Happy Holidays to you and your family.
Thank you.
Coming into the office for it, Neela Richardson of ADP and a Bloomberg contributor. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, Anne-Marie. CBS is reporting that former Congressman Matt Gaetz paid numerous women for sex and bought and used illegal drugs, citing a final congressional investigation report draft. Gaetz reportedly purchased and used drugs from his Capitol Hill office. He's denied having sex with a minor and using drugs in his written response to the committee. Amtrak passengers traveling ahead of the holidays are dealing with delays and cancellations in the Northeast. Amtrak says it's facing signal power issues, and travelers should brace for a significant delay in and out of New York's Penn Station. At least 8 services has been canceled, and 2 others between Boston and Washington were suspended because of equipment issues. And shares of Nordstrom, those are trading lower by 1.5% in the pre-market. The company announced it has signed a definitive agreement to be acquired by members of the Nordstrom family of Puerto de Liverpool, a Mexican real estate operation. The deal is expected to close in the first half of 2025, but is subject to regulatory and other concerns. And that's your brief, Anne-Marie.
Thanks so much, Danny, and have a lovely Christmas to you. Up next, setting up for your day ahead. Plus, Morgan Stanley's Vishal Kanduja. You're watching Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
All right, let's take a look at where things stand right now. Treasury yields are moving higher, and certainly at the long end of the curve. And a lot of that is tied to the Federal Reserve, indicating that it is not going to cut rates as much as previously planned. Only 2 cuts for next year rather than 3. Euro under pressure, that's been the case for a while now. Euro dollar at 103.97, so just below that 104 mark. S&P futures have been flopping around a little bit here, currently lower by 0.2% after declining week last week. In fact, 2 straight weeks of losses. In Amory, oil prices remain under pressure as well.
Yep, under pressure. But you mentioned it earlier, Rita said, it's been this narrow trading range when it comes to oil prices. And that has to do with the supply and demand fundamentals. What was so interesting in what she said is not about the glut of next year, but there is a ton of spare capacity out there. So if they had to, the taps could go on. And China is just not having the demand that they normally do.
Yeah, even with all the fiscal stimulus that they've telegraphed, that they've announced, it hasn't actually materialized just yet. Let's turn back to the U.S. economy because San Francisco Fed President Mary Daly says she's, quote, very comfortable with the Fed's median projection of 2 rate cuts in 2025. Vishal Kanduja of Morgan Stanley is writing, data and policy dependence will remain the theme for the Fed in 2025. Tension was building between the persistence of inflation in the forecast versus a policy rate outlook that calls for far fewer cuts than before. Vishal joins us now. Good to speak with you, Vishal. Thanks for speaking with us today. And of course, one of the big issues here is that the Fed favors both forward guidance as well as data dependence that you referenced, which to some extent are kind of at odds with one another. There's a natural tension there. At this juncture of the Fed's rate cut campaign, which is more important, data dependence or forward guidance?
I think data dependence is definitely more important for us all the time, and even now continues to be the case. I think the market is getting slightly ahead of itself on the other side this time. I think right after they cut the 50 basis points in the first meeting, I think the last three meetings, they've got 100 basis points total from 550 to 4 3/8 to 450 at the moment. That the market was overpricing about 250 basis points of cuts till end of 2025 after the first cut. And now the market is underpricing almost to the point of that the Fed is done here, which from our perspective, absolutely not. And that's why we've started to find that 0 to 5 year part of the curve very attractive on that part. And then one last point on that question, Scarlett, would be that not only data dependent, but very policy dependent as well. I mean, like not only the Fed, but then other central banks have held off some of their actions this month because they want to have a little bit more clarity on the first 60 to 90 days of the new administration. I think we heard it very clearly from the BOJ. They want to watch their inflation, wages and how they're coming through, and then also look at the first step of policies here from the U.S.
Right. It wasn't just the BOJ. The BOE basically did the same as well. So that raises a question, and it's something that was brought up at the Fed press conference and maybe is still a concern given how we're seeing Treasury yields continue to move up, which is why cut in December if there is still such a cautious outlook for next year for further rate cuts. It turns out the last cut was a pretty close call, and people question whether it was necessary at all, given the economy grew 3.1%.
Yeah, no, very, very, very fair questions. And I think the same sort of market participants were questioning the question at 3 meetings back was almost about whether the Fed is behind the curve. So we do think that, yes, around this 450, 425, 450 level is a fantastic hangout spot right now for the Fed. Yes, we can go back and forth whether this last cut, 25 basis points, was warranted or not, given the data. I think the labor market is still not completely out of the woods, according to us. I think you're still seeing that sub-100 private payrolls on an average going through, which is very different than the middle part of the year. So there is some part of that sort of monetary policy or slightly not as loose fiscal policy during certain parts of 2024 that led to the labor market weakening, if you will. Again, now weakening coming from a very, very strong trend. So let me be very clear about that you're still in that 4-decade low of unemployment rate. So yes, we can go back and forth, but we still think that 5.5 was very, very restrictive. 4.5, 4.25, 4.5 is right in the middle at the moment, not the easing policy that some market participants might be alluding to at this point. And yes, there is slightly more overexuberance in our point of view about the pro-growth policies that the market is worried about, or the pro-inflation policies the market is worried about. I think the administration still clearly needs to watch the 20 and 30-year part of the yield curve in the U.S. to make sure that they are not overdoing it from a policy perspective.
Was it appropriate that some members of the FOMC took Trump's policies of 2025 on board while others didn't?
Yes, I mean, like that is your independence of each sort of Fed member. We saw very clearly one dissent coming out from the new member who joined in, as well as then 4 other dissents that showed up in the dot plot, if you will. So that tells you even within the Fed, I think there is quite a bit of that independent thinking, independent viewing. And I think that there is still a lot of known unknowns from this policy. We know the 4-point agenda from the administration, but I think we also very clearly know that the math from the deficit situation is not going to allow those policies to be effectuated at the same rate or at the same magnitude. So yeah, I think slightly inconsistent in terms of how the independence came through in the policy rate, slightly or very clear in terms of the the push and pull that that's why that last 25 basis point of cut was not as clear to us and the market. But I think the forward-looking, the market is slightly ahead of itself in completely pricing out the Fed at this point.
All right, Vishal Kanduja of Morgan Stanley, thank you so much. And a reminder, by the way, Anna-Marie, you brought this up, there is a two-year yield auction, or two-year auction, I should say, at 1 p.m. today.
At 1 p.m. today, yeah, markets are still open. I know everyone is excited about Christmas and the holidays, but there is going to be a bond auction today, and then, you know, we're back on tomorrow and Thursday.
We are, and so let's count you down to the opening bell with just over a half an hour to go before the start of cash trading. Here's the trading diary for the week. Today at 10 a.m. Eastern time, so 30 minutes after the market opened, we'll get the Conference Board's consumer confidence as well as new home sales. And whether they move the market, these are probably like second-tier data points, so probably not as much. And tomorrow, you're off tomorrow, aren't you?
I'm off tomorrow.
Okay, so
you're here.
Good for you. Get some rest. U.S. markets are open for half a day. Equities closing at 1 p.m. And for a change, the bond market will be closing later than equities at 2 p.m. So certainly watch for our coverage here on Bloomberg Television. No trading and therefore no Bloomberg Television on Wednesday, at least live coverage from New York.
Merry Christmas.
For the Christmas holiday. Merry Christmas. Thursday, you will be back.
I will be back for jobless claims. Can't miss jobless claims.
Yeah, high-frequency data point, and as Vishal mentioned, certainly the labor market may not be out of the woods completely just yet.
Exactly.
Coming up tomorrow, we've got a lineup that you'll not want to miss. Stuart Kaiser of Citi, RJ Gallo of Federated Hermes, Ryan Peterson of Flexport, and Stephanie Roth of Wolf Research, talking about the economy, talking about equities. Lots to discuss here as we see equity futures currently indicating a mixed open. NASDAQ futures are higher, but S&P futures are lower. Yields are moving higher right now, and oil prices lower by 0.4%. And we're looking, of course, at Eurodollar now above 104. We've paired some more losses. Look at that. This is Bloomberg Surveillance. Good morning, everyone.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
How can you have dinner with friends without hinting at what you're thinking about? And do you ever get suggestions from your friends at dinner, this is what you should do? And how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but you know, it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, you know, calling up ChatGPT and saying, you know, here's all the data we have. What do you think about it would be a good idea? Have you ever thought about that, or they're not going to like you to do that?
We haven't done that. I mean, we have done little things like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different performing PE firms. You're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
The top names in business are on Bloomberg.
The IRA was I think, a legislation that was focused on carbon intensity, the right way to drive emissions reductions, and so we responded to that to demonstrate there are ways to continue to provide affordable energy and reduce emissions. How quickly do we want to advance those? Obviously, we need the regulations to come out of the administration. Even the Biden administration today hasn't fully translated the IRA into effective regulation.
Nobody covers business like Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr with us as well. Lisa Mateo in moments with the Bloomberg Business Update. Good morning on radio and good morning on Bloomberg Television around the world. A simulcast, if you will, to get us through the day. Important guests in this hour. Andrew Slyman of Morgan Stanley will join us. And Dana Telsey, I was going to do like How's the Louis Vuitton box at Fifth Avenue. Right. Forget about it. An iconic name and family in American retailing. Nordstrom's will finally move private, and Dana Telsey will give us wisdom on that in the hour as well. Again, we welcome you on YouTube, on your commute at home. Go on the commute, Apple CarPlay, all that, Android Auto, Bloomberg Radio, good morning. And then when you get to the office, Paul, YouTube, except if you're not at the office today, work from home, cook from home, you watch us on YouTube at home.
Watch us on YouTube, and we'll bring you all the market action here. Tom, a little bit of a mix on the screen here. S&P futures off 12, the Dow off 200, but the Nasdaq's up a little bit.
Dollar strength, you see that? DXY over 108 right now. Yen really doesn't go. 157.21, euro dollar 103.99, American oil $69.23. But the real headline to me, and we'll talk to Andrew Slyman about this in a moment, 2-point market up. This is a new high, 2.25% on the 10-year real yield. Where's the mortgage right now, Paul?
Oh, it's almost like 7% there, Tom. So the folks that are, boy, I'd like to move, sell my house, maybe go down to Florida with the rest of them. I can't get out of my 3 or 4% mortgage and go and get a new mortgage at 7%. I'm not doing that. So
on television, on radio, we say good morning to all of you here. And of course, what we do is the Bloomberg Business Flash. It's from the Interactive Brokers Studios. We thank them for that. Lisa Mateo, good morning.
Good morning to you. We've got futures mix. This is after a year-end shutdown was avoided. NASDAQ futures, little change, up about 12 points. We have Dow futures down 0.4%, 210 points. S&P futures down 0.2% or 12 points. The 2-year yield at 4.33%, up 1 basis point, and the yield on the 10-year 4.55%, and that's up 3 basis points. We have Brent crude $72 a barrel, WTI crude $69 a barrel. We have spot gold lower at $2,617 an ounce. Over to the Bloomberg dollar spot index, up 0.3%. We have the Japanese yen weaker, down about 0.5% at 157.22 against the dollar. The euro weaker, British pound weaker. We have Bitcoin down about 0.2% at just over 94,000.
You did that for television,
I totally did.
Yes. Yeah, we never would have quoted that on radio. Continue, Ms. Mateo.
We'll get to those companies making news right now. You've heard it here. Tom mentioned it. Nordstrom going private, all-cash transaction valued at about $6.25 billion. Nordstrom shares down more than 1%. And then Xerox has agreed to buy Lexmark. It's a deal valued at $1.5 billion. Xerox shares up about 8%. And Honda and Nissan have agreed to start merger talks, form a holding company. They plan to list by August 2026. Honda will actually buy back as much as $7 billion of its own shares. You have Honda up about 3% in Japan, Nissan up more than 1%. 1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Paul Sweeney and Tom Keane, we welcome all of you on Bloomberg Television this morning as well. And we're thrilled to get smarter with Andrew Slyman, head of Applied Equity Advisors. I have no idea what that is at Morgan Stanley. What Andrew Slyman will give you is the courage to participate in the market. Andrew, how do we get to a third double-digit bull market year?
Well, I think you have a combination of lower rates, $7 trillion sitting in the money markets that will search for a new home, or some of it will, and pro-growth policies. And that's how you could get to another double-digit year for the equity market.
I look at it, and it's double-digit earnings here. Gino Martin-Adams at Bloomberg Intelligence talking up 14%. Maybe it comes down. Do the security analysts at Morgan Stanley get you to a double-digit earnings growth year?
Yeah, I mean, one of the things, Tom, that, I've been on your show a lot. I've been pretty optimistic the last couple of years is that it's not about valuation. It's about the direction of the change. And what's, I tell, especially younger investors all the time, be very wary of pure valuation tools as a methodology to evaluate the stock market or a stock is cheap or expensive, because sometimes analysts don't get the denominator, the estimate right. And really what's been going on the last couple of years is earnings have been stronger than what is expected. So far, I've seen a lot of predictions that earnings are too strong for next year, but I haven't seen those numbers come down yet. And that falls into the positive camp.
I mean, Paul, that's the Andrew Slyman says, look, you got to participate.
Yeah.
Go to cash.
Yeah,
it's not going to work. Next.
Not going to work. Hey, Andrew, we've got the Fed cutting rates, but now it looks like in 2025 at a slower pace than maybe the market had been anticipating. How does that impact your view of the equity markets?
Yeah, I think this is good news.
Good news.
And let me articulate why. What I have been worried about is if you look at what's worked since July, when the Fed said they're going to start to cut rate, what has worked in the market is the low quality, what I would call junk growth stocks. A lot of companies that don't, have high revenue estimates but no earnings or very little earnings, very high multiples. The more risk you have taken in the last 6 months, the better you have done. And that scares me, because that screams of the year 2021, and we know what happened in 2022. The market fell apart. So to the extent that I think the Fed has kind of encouraged that risk-taking by saying, hey, we're going to cut rates, if they say, hey, you know what, we're going to go a little slower, good, rates going up, that takes the heat out of the bubble that I think is occurring in these speculative stocks. Right. I think that's healthy for the stock market. In many ways might extend the bull market longer than just 2025.
Right. Andrew Slyman with us, and we will continue with him. He's with Morgan Stanley, of course. We welcome all of you across the nation. If you're working, if you're computing, Apple CarPlay, Android Auto, of course, Sirius XM, Channel 121. Good morning on Bloomberg Television worldwide and on YouTube. All of our distribution on YouTube. Subscribe to Bloomberg Podcasts. It's the only way to observe Lisa Mateo. It's a constructive exercise, to say the least. Andrew Slyman, last week we had in the giant of free cash flow. You and I read free cash flow and shareholder yield with William Priest of Epic. It was iconic then. How do you study free cash flow in this great bull market? What's the Slyman method?
Well, I mean, it's interesting. I hear a lot of people come on shows like this and talk about how you have to have expansion beyond the Mag 7 and how it's dangerous that these stocks are very high weighting in the S&P. And I certainly agree with that. But at the end of the day, these are the companies, if I look at what's worked year to date from a kind of factor standpoint, corporate buybacks, companies that are buying back stock aggressively have in general outperformed. And that's the big boys. So to the extent that your question about cash flow, I look and say, well, what companies are generating a lot of cash flow? It's some of the best are these really big companies. So I think one of the most consensus trades for next year is that the market is going to expand beyond the Mag 7, and I think there's plenty of good ideas beyond Mag 7. But you have to face the reality. These companies are generating a lot of cash flow, and they're buying back stock, and that is positive. That's a big difference, Tom, to 1999, 2000.
Andrew, thank you so much. Andrew Simon with us, Morgan Stanley, here this morning on the courage to stay in the market. This is a special treat right now on this Monday. It's a frigid Monday. It's warm and cozy, the best hockey player at Bloomberg LP among 20-some thousand people, garbed in her New York Rangers wardrobe. Scarlett Fu comes in after a lot of coverage here through the morning. Scarlett, I've been dying to get you in here to talk viscerally about what we're going to see next year from Beijing over to Taiwan and all the heritage of the Fu family as well. Are you? I know you're studying this. You're studying it all the time. But as we have a new president, what seems to be what Taiwan wants from America as you study it every day?
Stability, some offer of stability, and some
like
sense
boats
that
showing the flag. It's that simple, isn't it?
I don't know if it's that specifically, but for things not to get worse, status quo may be just what you need. They don't need Trump, saber rattling any more than he already has, and they don't need Xi Jinping doing any more than what he already has.
What was the response? We had a lot of legislators, including at the time Speaker Pelosi, wander to Taiwan as well. Bring that forward into 2025. To our politicians, is it advantageous if they show the flag in Taiwan?
You know, it depends on who you ask. If you ask the younger generation, they probably would say yes. They like seeing that because they see Taiwan as their own independent country, its own culture, its own separate entity. You ask an older generation, you might get a very, very different answer. So, I mean, and of course, it's the older generation that has ties to the Kuomintang, right, to the nationalist government that ran and fled to Taiwan from the mainland.
How do you think the folks in China are thinking about this incoming administration? What's the view, do you think, over there? Is it concern? Is it optimism? Is it fear? What do you think it is?
I think they feel like they know that they're dealing with a known quantity here.
Okay.
The fact that President-elect Trump invited Xi Jinping to his inauguration and Xi Jinping and his team saw it for what it was, a flex, and we know that he's not going to be attending. I mean, this is all kind of part and parcel. I don't want to say that he's using an authoritarian playbook, but it's a little bit of like recognizes like.
Okay, we got to go here. We got to get her in here. The Rangers were Stanley Cup bound.
Hey, did I tell you, Tom, that I scored 2 goals for my team this season?
Did you lift the puck?
No, it dribbled in past the goalie. But you know what? A goal is a goal.
You scored 2 goals?
I scored 2 goals, yeah.
From outside the circles for the slot?
No. Like right from the goalie. I was kind of screening the goalie, but kind of not.
Okay, I got a problem. There's this guy that's suspended. For those of you worldwide on Bloomberg Television and Bloomberg Radio, Fu is going down in flames with the New York Rangers.
What happened?
Why are they skating this guy who every time he shows up, he gets suspended for cheap shots? In the old days, he would have got 3 teeth out.
You're talking about Matt Rimpey?
Yeah. What is this guy? What's the
Animal
value
spirits,
add?
he gets, the crowd into it. He gets his team excited. I think that's the plan or that's the vision behind it. I mean, the team needs some kind of pick-me-up because the core team, the core guys aren't doing it at the moment.
But they were doing it last year. And then what happened?
I don't know.
I don't know what happened.
President's Trophy curse, maybe?
Yes, okay.
And what you don't see up here on YouTube and on radio, I'm pointing at my headphones here, is Fu's entourage. She goes around with like 3 or 4 people. Yep. Ask her about Cornell BU. Are they doing the hockey game again, MSG?
They're doing it next year, yeah. Cornell beat the team that we played. Who did we play? Quinnipiac. This November.
Listen to you snob. Quinnipiac of Connecticut.
I know, no. I know. They were a very good team, but Cornell beat them. And we most of the games I've seen at Thanksgiving weekend at MSG, Cornell has won handedly. So we're going to see Cornell BU in 2025.
Are we as well? Okay. Usually she comes in at 11 a.m.
I know.
I mean, this is like...
Yeah, I waltz in. This is true.
Waltzes in.
Exactly.
Scarlet Food. Joan Rivers does a skit, folks, about the tallest Christmas tree. One Christmas she decided that she was doing Christmas up. Mary wore Chanel and Hermes and Manolo Blahnik. And her tree, Joan Rivers' tree, the late, great Joan Rivers, it was matched off Scarlet Food's tree in her house.
Wow.
It's like 32 feet.
I didn't know that.
It's like huge. It's in the back room up north of the city.
I have a couple of trees, you know.
Why did I not know
Multiple
that?
trees.
Scarlet Food, thank you so much for joining us this morning on television, on radio worldwide, Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
A continent of vast opportunity and endless potential, but not without its challenges. Bloomberg highlights the players and unpacks the issues shaping the African story. We'll bring you interviews with key newsmakers and expert analysis, getting to the heart of business, politics, and economics in the region. I'm Jennifer Zabasaja, and this is Africa Amplified.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a mix of red and green on the screen, and this is after the fight over spending in Washington. Well, it was put on hold for another 3 months. We have NASDAQ futures little changed, up about 10 points. Dow futures down 0.4%, 177 points. S&P futures down 0.1% or 10 points. The 2-year yield at 4.32%. That's up 1 basis point. And the yield on the 10-year, 4.54%. That's up 2 basis points. Over to commodities, we have Brent crude at $72 a barrel. WTI crude $69 a barrel, and spot gold lower at $2,618 an ounce. The Bloomberg Dollar Spot Index up about 0.3%, and we have Bitcoin up 0.3% at just over 95,000. Few companies making news. We'll start with Palantir and Anduril. They're reportedly in talks to partner with some tech rivals to make a joint bid for U.S. government work. That's according to the Financial Times. You have Palantir up about 0.2%. Universal Music Group, you know, the company behind Taylor Swift, Drake. Well, they have expanded its global partnership with Amazon Music. And then you have Hyatt Hotels in exclusive talks with Playa Hotels and Resorts over options that may include a sale. Playa up about 20% and Hyatt up 3%. And finally, the Container Store filed for bankruptcy, addressed growing losses and a substantial debt load. I know, very sad. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That's your Bloomberg Business Flash.
But that speaks to retail. I mean, you got Dana Telsey of Nordstrom's coming up here, and the retail is brutal.
It is.
It's just, I mean, there's no other way to put it.
It is.
Good morning on radio, on television. This is Paul Sweeney, Tom Keene, Lisa Mateo, Mr. Barr showing up from time to time. We welcome all of you to our frigid studios here, our world headquarters in New York, Lexington, and 59th Street. I've been dying for this conversation. This is on foreign exchange, which I call the litmus paper of the system, the deepest market out there. And I got a chart. I'm not going to explain it because it's too cold outside. But the answer is the Plaza Accord was in the 80s. Massively strong dollar. OMG, are we going to have a Mar-a-Lago Accord? And if you do the geometry of the move that caused the Plaza Accord, we're nowhere near the dollar strength yet to get to the Mar-a-Lago Accord or the, whatever accord they're going to call it. Jane Foley of Rabobank joins us here with DXY 108, yen 157.16. Jane, do you extrapolate out that someday there will be too much dollar strength for the global system?
Well, I don't think we're anywhere near that day yet. I mean, you can never say never, and maybe we will get to that. But you've got to remember that if there is going to be an accord, well, lots of different sides have got to agree to that. And right now, who's going to agree to that? I mean, if you put yourself in the position of some of those German exporters, they're probably quite happy with a softer euro right now, particularly given the threat of tariffs potentially from the Trump administration. Would they suddenly agree to have a stronger euro and a weaker dollar and maybe tariffs? I don't think they would. So we're nowhere near coming to that agreement. I mean, would we get to a situation when it could be said, well, look, you agree to maybe a softer dollar and there will be no tariffs? Maybe we could get to that sort of negotiation. I mean, it's not inconceivable, but I don't think that's what we're looking at, certainly not for this year.
What should we observe on global Wall Street, on currency dynamics? What's the Jane Foley metric you use to look at this dollar strength tension?
I think we've got to potentially look at emerging markets because there's a lot of fear that because of the Trump policies, because of the threats of tariffs, because of the, Made in America theme about, Trump's policy, the want to get manufacturing back into the U.S., what is that going to do to investment in emerging markets? So in fact, what's it going to do to investment in other parts of the world as well? And that, I think, will be, something that the global economy is going to be very sensitive to. I mean, I've read some reports that suggest that some emerging markets will be almost uninvestable because of the Trump policies, because of the pull to get investment back into the US. And I think that's something that we're going to watch. That's something that could really affect the global dynamic.
And Jen, even for the developed market currencies, with the Fed cutting at a slower rate than maybe we had anticipated just several months ago, yet we still have the ECB and the banks across the world cutting rates, I can't think of a bear case for this U.S. dollar. Is there one?
Well, I would agree. It's difficult to figure that out. I mean, maybe, against the yen, maybe the yen can pull up ground because, we have this story of the Bank of Japan, potentially hiking the rates, progressively, although cautiously through 2025. But there is that bigger story. Japan is wants to sort of pull itself out, is pulling itself out of 30 years, really, of disinflation, deflation, and it wants to win investment. Now, if it does win more investment into Japan, or indeed if some of those big Japanese life insurers, buy less U.S. treasuries and more JGBs, well, you could have a different story for the yen. But apart from that, I would agree with you. I think certainly going into the middle of next year, and it's quite murky to try and, really figure out what's going to go on in the global economy beyond that. I think we are looking at a stronger dollar story.
So where is there a value out there in some of these other currencies here that are just screaming value out there at this moment?
I think, what perhaps a lot of people are going to do is try perhaps to leave the dollar out of the equation and maybe look at currency pairs such as euro yen, euro sterling, Aussie New Zealand, those sorts of currency pairs, because, that there is this perception that there's a lot of this news already priced into the dollar. The market was still surprised last week with the hawkish hold from the Fed. Not an awful lot is priced in now with respect to Fed interest rate cuts. There's a lot of cuts priced into the euro, for instance. So there is, on one hand, this perception that maybe we've seen most of this move, and hence the attraction of looking at some of these cross rates. But personally, I think the dollar probably has still more strength to show us.
Okay, I got to make some money here, Jane. Christmas is killing me this year. Jane Foley, am I going to go long Korea won of the absolute train wreck of news flow on KRW? Do I want to go strong Korean won from this peaky moment? And if I do, what pair am I going against?
I think if you are going to go strong Korean won, and there are lots of, strong fundamentals about, that economy, politics aside, I think you'd probably pick out another emerging market. Now, obviously, you sort of run into some liquidity issues there, but, I think that's what to do. I mean, I would certainly think you'd be very brave trying to buy that against the dollar, or trying to buy it
give me
against
an
the yen at that point.
I'm ready to trade here. Give me what is my trade here to play Korea short? Is it Korean won, Japanese yen? Is it Korean won, Polish zloty? I love saying that, zloty. Which is it, Jane?
I think you could do it against the euro. I don't think the euro is going to have a very good time in the first part of next year. But you know what? I think that's going to be good news for the Europeans because of, the stagnationary position of Germany's economy, the political issues, the structural issues that we've got in Germany right now. I think a weak euro is exactly what that economy needs. And I think increasingly the governing council at the ECB are coming to recognize that.
This is great. I mean, I love it. I've never typed in EUR-KRW, Euro won.
You can do that at Rabobank.
You can do that at Bloomberg. You do it every day at Rabobank. Jane Foley, thank you so much. We're looking at EUR. Lisa's like, she's on the phone right now trading this puppy. Euro, Korean won. We do not make recommendations here, we should say. Jane Foley again of Rabobank. Across the nation, of course, and really worldwide, I should say, Apple CarPlay, hugely international. Good morning, Sirius XM. And on the radio corridor from 99.1 Washington up to 92.9 in Boston. And this morning we're on Bloomberg Television with you, and we welcome all of you out on Bloomberg Television. My makeup look okay?
Perfect.
I said to Lisa, what she whispered to me here, Guerlain. Get some Guerlain, you'll be better. So I hope the makeup's okay for Bloomberg Television, man. That's the way they roll over there. We don't,
Alex Steele says you have to invest in your face. That's all I know.
Oh, really?
Yeah. John Tucker and I, we missed that memo.
I completely missed that memo. Don't forget, we're out on YouTube. Subscribe to Bloomberg Podcast. Originally, we're out on Bloomberg Originals as well.
Oh, that's nice. Okay.
Good morning from New York City, frigid New York City. Coming up, Dana Telsey will join us middle next half hour. This is Bloomberg Surveillance.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Sorry.
My voice and my conversation, my poetry,
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building an organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, It's about the systems, the values, the mission. It's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, and it's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
In New York, I'm Menace Credit.
And I'm Danny Berger. What's at your agenda?
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo alongside Tom Keene, Paul Sweeney with your opening bell report. So how are these markets going to kick off this shortened trading week after a year-end shutdown was avoided? We also had more economic data. Durable goods orders fell 1.1% month over month. The expectation was for a drop of 0.3%. And then November building permits, they were revised down. Right now, we'll start with the S&P 500. Little change, down up about 4 points at 5,935. We have the Dow down 0.2%, 80 points at 42,755. And finally, the NASDAQ up 0.3%, 76 points at 19,652. The 2-year yield at 4.32%. That's little change. And the yield on the 10-year at 4.53%. That's up 1 basis point. Right now, we'll head over to Brent crude, $72 a barrel. WTI crude, $69 a barrel. We have spot gold lower at $2,618 an ounce. The Bloomberg Dollar Spot Index up about 0.3%. The Japanese yen down 0.4% at 157.09 against the dollar. The euro down about 0.2% at 104.02 against the dollar. And the British pound weaker. Finally, Bitcoin up 0.3% at just over 95,000. That is your Bloomberg opening bell report. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate that. A little bit of oomph to the market versus with futures. Where Paul, Apple opening up fractionally, 255. It's just been on a modest tear. I got a $3.857 trillion. I interpolated the extrapolation. I've held my hand. Yep. And it's like 263 is a $4 trillion Apple. What's its signal besides it's unimaginable?
People buying a lot of these things. So that's the first thing. There's a bunch of these Apple products.
Apple, China, OMG, they're all going to die.
Boy, I still think that China is an issue for this company, but boy, the investors don't care. The market does not care. Again, 52-week high today, up 32% year to date.
Very good. I did not know that.
BQ function.
We say good morning to all of you on radio and television worldwide. Scarlet Fu, huge impact having Scarlet Fu in there.
2 goals for her team.
2 goals for her team, and she did not lift the puck and dribble, but sort of like the Rangers. We say good morning on economics, finance, investment, international relations, synthesizing it in, and someone helping us with that is Steve Sosnick. Steve Sosnick is chief strategist at Interactive Brokers. What are we missing in this market? If I sit there in the morning on Saturday with my Senka, and I'm reading Barron's, and I'm turning the pages just like Mom and Grandpa did years ago, what am I missing in the Saturday morning Barron's?
I think I'm not going to say that I know you're missing it, but I think the key element here is we've all become momentum traders, and we've all gotten a bit speculative, and that's really what's going on, and the speculation has gotten increasingly crowded and narrow. I think it was very meaningful that Friday was the first time in the month of December that we did not have S&P decliners outpacing S&P advancers. And prior to that, prior to Wednesday's drop, the S&P was up for the month. So I think it's becoming increasing. Once again, we're seeing this concentration in the Mag 7. You were just discussing Apple. My fear is it's becoming a little bit cultish and a little bit narrow because, you know, if you think about a building, if you keep knocking out pieces of the foundation, eventually it becomes less stable.
So as we...
Yeah, that describes Paul Sweeney's place in Nantucket. Exactly. Roll into the ocean.
2025, what's the theme going into 2020? We've had 2 years of 20% plus growth in the S&P 500. What happens in a third year?
Well, this is the thing. What kind of, you know, the be fearful when others are greedy type of element is really creeping into my mindset quite a bit. You know, everybody's talking about, you know, how this market is likely to continue to rally. You know, people are talking about the 15% or so S&P profit growth expected for 2025. Well, that's priced in already. So I do think right now we witnessed a bit of extra government dysfunction on Friday, basically with the budget crisis. I think there's going to be a lot more political uncertainty that the market hasn't priced in, and I think there's a lot of good news already priced in, and nobody's expecting anything on the downside, which makes me wonder, are we susceptible?
What are you hearing, observing in your meetings? You're away from this in strategy, but as we would say to your competitors like Robinhood or your competitors like JP Morgan, what are you hearing from Interactive Broker clients? What's the mood? I can't figure it out.
The clients are definitely favoring, they're favoring the same names that you know, if I asked you to guess what our top 5 names are, you'd probably get them. It's NVIDIA, it's Tesla now, it's unseated NVIDIA.
I mean, retail basically is saying, forget about the sophistication of Wall Street, we're comfortable owning these things.
Yes, and for example, when you had Broadcom zooming higher and NVIDIA sinking a little bit, we actually saw our customers fading Broadcom a little bit and buying NVIDIA in size. So they are sophisticated in that sense. They were taking the opposite of the institutional flow. But what we tend to see is a lot of speculation. And they love double levered ETFs. So if you like Tesla, why not have TSLF?
On this show, we say triple leveraged. Okay, that's where we're going. It's in registration. Belchunas went back and forth with me. Lisa, I mean, the quality of this bull market, you're transfixed by it, right?
Of course.
So, Steve, I mean, Interactive Brokers, what are your clients buying these? Are they just still buying the Mag 7? Are they trying to find some value out there? Are they trying to get thematic with a Trump presidency?
I think themes are very important. So Tesla is, again, resumed number 1. We see Palantir. Now, some of that may have had to do with the NDX rebalancing, but Palantir's gotten very popular. Anything to do with quantum computing came out of the blue. So a lot of these names
Lisa's been reporting on all day.
Exactly. When I look at our most active list, some of these names I had to sort of look up the symbols. I'm like, I've never heard of these companies because they're relatively small quantum computing companies that went from, you know, let's say 2 to 12 in the course of a few days, and our customers are very perceptive about those kind of moves and tend to jump on them and view them as trading opportunities.
BitDog, I mean, Steve, you've been doing this for years. I mean, you were at Solomon, what, 1830, 1870?
You know, back when
did you walk in the door at Solomon Brothers?
I first walked in the door as a summer intern in 1985.
So like Bunker Ramo?
Yeah, you know, I remember when we first got a Bloomberg terminal. That was exciting. I was the kid who was told to figure out how to use it, basically.
Really? You looked at, and right behind me, folks, for those of you on radio and television and YouTube, right behind me is our museum of terminals, and Sosnick and I can go out and walk to the right, and there's back there. Yep. Remember when there was a green button on the terminal and it said message?
Yes.
And you didn't know, you'd literally, you'd go in every day, what is this button for? I mean, and of course, Mr. Bloomberg, of course, I think darkened the door at Salomon.
He did.
Years ago. I mean, it was fun back then. Pim Fox had the bond, the S&P Blue Book, the bond book, and we bought individual stocks. Are we doing that, or are we all like Lisa, just buying an ETF?
I think most of us are buying ETFs and index funds, but what we see among our clients who tend to be active traders, and I'll use the term here that one of my friend Henry Schwartz at the SIBO called pro-tail, and I love it. And he didn't refer to pro-tail, which I think refers.
Can we say that on radio?
I don't know, and that's why I had to footnote him but I think it's great because our customers, it's very hard in many cases to delineate who's retail and who's professional because many of them are sort of well, this is a lot of it. So those customers are very active traders and surprisingly sophisticated.
I like that.
And
we're stealing this puppy.
Yeah. Yes. Well, that's why I had to give credit when credit was due to start.
So Interactive Brokers, ETFs, that must be what your clients are trading all the time because of the lower cost aspect of it, right?
Yes and no. I mean, again, number one on our list, yes, there's always big ETFs on the list. And again, in many cases, the mentality is why trade triple Qs when you could trade TQQQ, which is 3x leverage, to Tom's point. We do see a lot of action, individual stock and options. But for example, IBIT, our customers weren't all that interested in it, and then they listed options, and then all of a sudden IBIT started to creep into the most actives list. So again, they want option. Our customers trade a lot of options. My career is really as an options trader, and this is how we were built, and this is what our customers gravitate to.
IBIT, iShares Bitcoin Trust ETF is an exchange-traded fund domiciled in the U.S. That's what they're trading?
Well,
and the triple leverage.
Well, they trade a lot of among them. They also trade a lot of MicroStrategy, which is effectively a double or triple levered Bitcoin, Bitcoin ETF.
1, 2, 3, 4. Off the Bloomberg Professional Service, the triple cubes. I've never looked this up before. TQQQ. Was down 15% in 3 days with that leverage here.
Yep.
Pull back to. Can you imagine where they would go on a VIX of 30? I mean, that would be something.
Well, we almost got right. I mean, VIX got to 28, so that was pretty much close to it. I mean, that was very much on Wednesday. I need protection and I need it now, or I needed it 10 minutes ago, and I'm going to pay up for it.
What are your clients doing on the fixed income space here? Because now they can actually get yield here for the first time in many, many years.
Well, we're very proud of the fact that we have, and I don't mean to sound like a commercial, but this is true. We have, we offer access electronically to, and I forget how many thousands of bonds, corporate, municipal, government, et cetera. Our customers, again, the investor customers are good with bonds. They are finding that there's yield. The trading customers find them less exciting than stocks and options.
Yep.
All right, what's your structure for next year? The greatest thing about Steve Sosnick is there isn't an 822-page outlook. It's like on a 3x5 card. What's a 3x5 card look like for next year for people at home? They're in a 401k. They've actually been doing okay. Now what?
Don't drink the Kool-Aid. Be wary, because one of the things that I think January is going to be very telling. I know I'm saying this as in December we have a couple weeks to get through anyway, but January 20th is inauguration on a market holiday, by the way. That's Martin Luther King Day. Don't forget that one. Oh. So that's an interesting feature.
Okay. Didn't know that.
But then earnings season to me is going to be crucial because, again, if we're expecting double-digit earnings growth in 2025 off of, call it 2 to 3% inflation and 3% GDP, where does the other 9 or 10% come from? Mm-hmm. And so if companies don't reaffirm that, and you've seen it day to day when companies don't do it, think about Micron. Out it goes.
You're the first person on the show to mention is Paul G. You can look through this, folks, on the DES screen. Lisa Mateo taught me this, that the Apple Equity DES, January 30th of next year, is Apple earnings. And nobody's talking about this yet, but with JP Morgan starting out, it's going to be a big deal, isn't it?
I think so. I think this is going to be critical to set the tone for the year. If the companies indicate that the guidance is good enough to support what's already priced in, well, then the market can do fine. If any whiff of trouble is out there, the market's going to have to readjust and readjust quickly.
Steve Sosnick, thank you so much, with Interactive Brokers, our chief strategist, with us this morning. We say good morning across the nation and a frigid commute. Some in Killeen, Texas, 70 degrees this week. Not everywhere is cold.
Killeen, Texas. I was thinking, what's in Killeen, Texas? We got some tank people down there. The U.S.
Yeah.
Army's got a big base down there.
Yeah, it's like between Waco and
that's what I was thinking.
and Austin, and it's on I-35.
Yeah,
You know,
serious
you play ZZ Top when you roll down there. You're okay. We say good morning across the nation. You're on your commute, Apple CarPlay, Sirius XM. Good morning. On the corridor on Bloomberg Radio 99.1 FM in Washington. Nathan Ager killing it this morning with the early daybreak, and on up, of course, to 92.9 FM in Boston, and of course on YouTube. Subscribe to Bloomberg Podcasts out on YouTube, growing each and every day. There you can find the best of Bloomberg Radio and Bloomberg Television. We say good morning to Bloomberg Television across, worldwide this morning, I should say as well. What's coming up? Dana Telsey with us here. For those of you worldwide, Nordstrom's is this iconic Northwest American name. It is a heritage. It's like Macy's. They don't have a Thanksgiving Day parade.
No,
and they probably used to, because it used to be across the nation. But Nordstrom's is iconic. They throw in the towel this morning, and they will go private. And it's been, I think we've been waiting for this.
I think so. Yeah, I think so.
But we have the guest. I can't tell you how Dana Telsey is perfect to give us perspective on the struggles of retail in America. Red and green on the screen. NASDAQ up a sprightly 0.4%. Dow goes the other way. Fractionally, the VIX 18.75 on the VIX. What am I looking at? The 10-year real yield out to a lofty 2.24%. Some of the tension that we see within the fixed income system. On Bloomberg Radio, on Bloomberg Television, good morning.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge. Only on Bloomberg. Context changes everything.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, stocks are split, and this is after a government shutdown was averted. We have the NASDAQ up about 0.1%, 32 points, but the Dow down 0.4%, 178 points. The S&P 500 down 0.1% or 4 points. We head to the 2-year yield, 4.33%, up 2 basis points. The yield on the 10-year, 4.55%, and that's up 2 basis points. Brent crude, $72 a barrel. We have WTI crude, $69 a barrel, and spot gold lower at $2,614 an ounce. The Bloomberg Dollar Spot Index up about 0.3%. It is a big day for two stocks with cult followings. We're talking about MicroStrategy, Palantir, both entering the NASDAQ 100 index. Steve Sosnick, Interactive Brokers, was just talking about Palantir. MicroStrategy said it brought about $561 million of Bitcoin last week, funded by issuing new stock. But both of them are down right now. Palantir down about 1%, and MicroStrategy down about 5%. Something else Steve was was talking about. Stocks linked to quantum computing, D-Wave Quantum. Those shares up about 17%. You have Rigetti Computing up about 22%, and quantum computing up 3%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. On Bloomberg Radio and Bloomberg Television, the VIX 19.00. Right now, and this is an immense honor, Dana Telsey scheduled to join us on the holiday, but we must pause for the end of an era. Nordstrom's Always and Forever of Seattle will go private. This on the same day as a Container Store files for bankruptcy. Lisa Mateo had that story earlier. And the emotion of a family running a store defines Dana Telsey as no one else on the island of Manhattan. She was intimately involved with a small store at 57th Street at Fifth Avenue, name of Bergdorf Goodman, as a child. Dana, the emotion of a family running retail, and then it's over. Describe your thoughts as you hear of the privatization of Nordstrom.
A couple things. So first of all, Tom, thank you very much for having me, and it's an honor to be here with you, and happy holidays to you and your family. And you're right, exactly. The privatization of a family-run business that's been around for over 100 years is definitely a spark of change. I think the new environment today is different than it was in the past, and you have to give Nordstrom credit for all that it's accomplished. But the go-forward environment requires big changes, and whether it is a reduction in the number of full-line stores they have, the acceleration of what may be for the rack, the continuous pursuit of new and curated brands in their assortment, and for all what we know about Nordstrom, the service element and the loyal customers they have is something that needs to be expanded and accelerated go forward after all that they've accomplished.
For Nordstrom, and for your Bergdorf Goodman, and as Joe Feldman at Telsey Advisory Group covers big box, what are customers choosing to do this holiday season?
Well, this holiday season, I think overall it continues to be about innovation and newness. You look at Birkenstock with very good sales increases in their own stores and wholesale stores. That's newness and differentiation with their closed-toed shoes. I'm thinking of other winners, and you take a look, frankly, at Lululemon, where the newness in colors is driving demand. We're still not seeing the luxury world see any real acceleration. There are certain brands at certainly the super upper end, like Hermes, that's always different than everyone else. But what people are searching for and where they're going continues to be value, particularly at the lower and middle income tier. Whether it be at TJ Maxx, whether it be at Walmart, that's where we're seeing certainly some of the strength lately.
So, Dana, what are some of the retailers that you follow and have followed for such a long time? What are they telling you about this holiday shopping season this year?
Compressed holiday season is a factor. You're seeing 5 fewer days between Thanksgiving and Christmas. Consumers started earlier. There were promotions that began earlier, but the state of promotions isn't greater than what was expected. The other thing that happened with Christmas on a Wednesday, the digital shopping days where you can get even same-day delivery that many companies are putting in place with DoorDash, and you only have one more day to be able to take advantage of that.
Anything kind of jumping out as the go-to gift this year? I know some years we've definitely had those types of stories. Is this one of those years?
I think it's a little bit wider spread. I think, keep in mind, we've had Taylor Swift's concert ending, but Target had the Book of the Eras tour. You have the closed-toed Birkin shoes that basically happen to be very popular. And if you're into denim jeans, barrel leg jeans are what it's all about. And you're still seeing newness in cosmetics occur, and I think that's some of the independent brands that are driving demand.
Yeah, I noticed that the fam was at Ulta and Sephora. It was a double-digit day. Dana, I got a $9,950 jacket over at Chanel. And the news here, and I think of, The Devil Wears Prada, where Meryl Streep walks in and throws the purses and the bags and all the fanciness. Mathieu Blazy, I know I'm butchering the name, but the guy from Bottega Veneta goes over to quote-unquote save Chanel. What does that signal to you that something as iconic as Coco Chanel's franchise needs saving?
Well, keep in mind, ever since Karl Lagerfeld passed away, who was the icon of the Chanel brand, and you had his long-standing colleague basically take over for the past few years, you need to have a marker. And I think what we've seen this year is many brands are getting new designers. Obviously, you've had things happen at Gucci, which it's needed to happen. We have changes going on at other of LV's brands with the whole change in leadership that's occurring. And I've always believed that typically for many, it's 15 years that a designer has the eye of the consumer and that their eye doesn't get tired of the brand. Karl Lagerfeld did it much longer, and I don't see anyone else like him out there.
Fascinating.
Yeah, it is.
Dana, the holiday season here, and I got all these gloom articles out about retail, and yet we're still aspirational. After the pandemic, have we changed as consumption beasts?
No, I think we're always going to be consumption beasts. And you know why? There's a point of excitement and socialization that consumption brings. And look what we're seeing in terms of discretionary spend. Where could 2025 see a resumption of acceleration of discretionary spend? Think of what we've seen in 2024, where old brands becoming new again, where the cultural relevance of Gap taking hold. And is Victoria's Secret going to be a name for 2025, given the lines we've seen so far in 2024 with the arrival of Hillary Super as CEO in September of 24?
Dana, great article out on the Bloomberg Terminal entitled "Kirkland for Christmas: Shoppers Ditch Logos for Store Brands." I didn't know that was a thing. What are you seeing out there?
I think overall, when you think about private label and store brands, there's no one more successful in the essentials world than Costco's Kirkland's. And one of the interesting things about their own brand there, everyone knows the name. So yes, store brands matter. You're even seeing some of the department stores and apparel looking to activate and enhance their own private label brands. It's also value, and that it typically has a lower price than any regular brands.
You got Joe has an outperform on Costco. Costco to the moon, Dana.
You know what? A competitive moat that can scale.
Okay.
Think of what Costco has: more stores, more products, more customers, and really loyal members.
Dana, we finished strong here today. Thank you so much in this 9 o'clock hour for your perspective, particularly on JW Nordstrom. They will go private after a decade of price decline, to say the least. We're on Bloomberg Radio, on Bloomberg Television, and we'll continue this dance through the day. Very excited about that. I got red on the screen, a little bit of NASDAQ lift here off of that quantum, whatever it was. The VIX out to 19.10. I mean, do you got a trading feel to it, Paul, or is it like, we're halfway to the holidays to Christmas?
Yeah, I think that's exactly where you're at, Tom. I mean, you got the S&P off just a little bit, the Dow off about 200 points, but the NASDAQ's higher. So it looks like it's just kind of some individual names, not much themes there. But, your Bitcoin's off 1.5%. I have to call it out for you, Tom. We're just below 94,000 per token.
2.25% on the 10-year real yield. That's the inflation-adjusted yield, and that's migrated here. I don't have the numbers in front of me. I just can't do it this morning. But 2.25% in the 10-year real yields. They're also watching the dollar with a 108 DXY. I've got the yen 157.17, the euro under 104, the euro 103.96 this morning. We say thank you for your attention through the day. Lots going on this Monday on Bloomberg Radio and Bloomberg Television. We're produced by Cy Benson, and our global technical director, day in and day out, is Kenneth Fellio. Please stay with us on YouTube. This is Bloomberg Surveillance on radio, on television.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice and my conversation, my poetry, you know.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome to a simulcast of Bloomberg Markets. We are across TV and radio today. I'm Caroline Hyde in London, alongside Paul Sweeney in New York. And, well, we've got a tentative day on the markets, it would seem, at the moment, Paul, and some breaking news with November new home sales coming in at 664,000 annual rate. Just a little bit shy of the 669,000 expected, but December consumer confidence, 104.7. That is well off the 113 that had been anticipated. We're off on the S&P 500, but only slightly.
We are, Caroline. I'm just looking at that new home sales, coming in a little light. We had a little bit of revision higher last month, but, new home sales, you got a mortgage rate between 6.5% and 7%. It's kind of a tough sell to ask someone to, leave their existing home with a 3 or 4% mortgage and go out and buy something down in Florida or Austin, Texas, or wherever they're going at something close to 7%. That's a tough sell.
It's a tough sell and a global theme with interest rates still anticipating whether we'll get cooling at the rate that we'd anticipated. That was the shock to the market last week when the Fed signaled, hey, maybe only 2 cuts, and the rest of the market recalibrates that. But we've just really got some cautious trading heading into Christmas. We've got lower volumes. Interesting that the Nasdaq's being helped by some of those chip names, at least on the day.
Yeah, exactly. So we're seeing, it's going to be it's a holiday week. I mean, Caroline and I will be here, but a lot of other folks are not. So we're going to see that in the trading volumes. And might see some moves in some individual names this week. That tends to happen on some of the weeks where you have some lower volume, Caroline.
Yeah, look at Walmart. Shares extending their opening decline to 3%, most since June. That's on the back of some consumer confidence being pulled back. And it's something that we've got to be debating with some market analysts and experts out there.
Yeah, Tom Keane and I were just talking to Dana Telsey Advisory, talking about Nordstrom. There's a company, a brand name, well-known name, certainly here in the U.S., going private, which just kind of highlights some of the challenges those department stores continue to have here as we close out this holiday shopping season 2024.
Meanwhile, shall we get out to our first guest to discuss what's happening with the likes of Walmart, what's happening with the likes of consumer confidence? Emily Rowland, I think, is joining us. Hey, Paul.
Yep, absolutely. Emily Rowland, she's joining us here. John Hancock, Investment Management. Emily, thanks so much for joining Caroline and me. Give us your thoughts here as we think about 2025, because boy, in 23 and in 2024, 20% plus returns. Yeah. What can we expect in 2025?
Yeah, Paul, the last time we saw that was in the late 1990s. So really extraordinary stretch for investors here. And it all came on multiple expansion. In fact, if you look at last 12-month earnings growth for the S&P 500, it's now modestly lower than it was 2 years ago. So we've seen this incredible amount of sentiment driving markets higher. And going into next year, things look pretty good. We're looking for positive earnings growth. The economy is reaccelerating. I think the challenge is that we're just starting from a very elevated starting point here, given that we're trading at 22 times forward earnings. The high of the last 30 years is 24. So we certainly could see a little bit more multiple expansion going into next year, but we're going to need to see earnings be the driver of returns. And we think high quality stocks in the United States can continue to deliver. We also like the income that's available here in high quality bonds, especially given this backup that we've seen in yields to close out 2024.
So how about valuation here, Emily? Boy, we've seen such a big move in the stocks. I'm not sure we've seen a commensurate move up in earnings here. How do you frame out kind of the valuation for this market?
Yeah, it's tough. And especially you look at things like the S&P 500 Growth Index, it's trading at about a 50% premium to its 20-year average right now. Now, of course, that's where the earnings are. So we do still think that earnings can deliver in that space, but investors are obviously paying a lot for those earnings. So we want to diversify into areas that still offer quality, but that are trading at a reasonable price. So that's really our mantra into next year, is quality at a reasonable price. We're finding it in areas like U.S. mid-cap stocks, which are trading at their steepest or cheapest valuations to their large cap counterparts since the late 1990s. They have an overweight the industrial sector that's benefiting from onshoring trends that we're continuing to see here. So we really think that that's a longer term thematic theme that you're not overpaying for in this market. We just want to be mindful of this sort of speculative frenzy that's been building across markets to close out the year here. So we're really fading those areas, unprofitable areas, crypto. I mean, it's just remarkable to see the risk taking that's really pervading markets to close out the year here. So our title for our outlook next year is Resist Turning Up the Volume in Portfolios. It's about participating, embracing opportunities across equities and bonds without going over your skis and taking risk.
Bitcoin currently at 94,000, way off that 108,000 high today, Emily. I want to go back to the breaking news that we just started the show with, though, and actually dwell on the December consumer confidence, because it's not riding as high, not nearly as high as the market had anticipated. We were expecting a number of 113. It comes in well below at 104.7. That's taking a knot on some key stocks here. Walmart currently off by more than 3%. What is the consumer outlook for you for 2025?
Yeah, so consumers are still concerned about inflation, and that is a problem, especially for the lower end consumer here. As you're starting to see, as we're hearing from a lot of these retail names, that consumers are protesting higher prices. They're looking for alternatives that are cheaper. The high-end consumer, though, is benefiting from this massive wealth effect that we're seeing. We just went from $40 trillion in market cap of the S&P 500 to 50 over the course of this year. Again, back-to-back 20+% return. So there's a huge wealth effect here that's really pushing the services side of the economy higher. I mean, looking at that services PMI that came in last week at 58, that is remarkable. The consumer is on fire, really for the large part, but certainly some challenges here as consumers continue to contend with inflation that is decelerating, but it's still higher than it was from pre-pandemic levels.
Let's just go for some of the calls that you got really right. And one of them was, look, all in on the US versus the rest of the world. What does 2025 look from a geopolitical perspective for European stocks, for Asian stocks, when we're looking at, well, really the US has been the story of overperformance?
Yeah, Caroline, when we think about the decision between U.S. and non-U.S. equities, geopolitical risk, of course, comes into the view. That one's a bit harder to handicap. What we tend to do is try to identify where is the best relative economic growth and where is the best relative earnings growth. And right now, the U.S. Is just seeing the best growth. We talked about the solid consumer. We talked about the PMIs or business surveys being elevated here. In fact, the hard data is starting to catch up with the soft data in the United States as we're seeing some improvement across labor markets, et cetera. Overseas, not so great, especially the manufacturing sector, really in trouble in Europe. Their services side is doing okay, but not as well as the United States. And that's translating to better earnings growth estimates in the U.S. Analysts are penciling in about 15% earnings growth. That might be a little tough to get in the United States, but it's about half of that overseas. And finally, we think the dollar likely sees modest appreciation into this year, and that would also speak to an overweight to U.S. versus international stocks.
Emily, how important is the Mag 7 for your 2025 outlook? It's been such a theme for 23 and 24 for these markets. How about next year?
Well, it's critical, Paul, because of the market concentration. Right now, we're seeing the biggest concentration in the top 10 stocks in the S&P 500 in history. They represent 40% of the market cap. So that's really, really going to be important. Expectations are elevated. Again, it's a tough starting point into next year. We still think that they can deliver. We like where the earnings growth is, but I think there is some risk here as we head into next year that those names have run so much that they might deserve a little bit of a breather here. And hopefully we can see some greater breadth across markets in 2025.
Emily Rowland, John Hancock, Investment Management is always a joy. Happy holidays as we look towards that breadth next year. Meanwhile, looking towards next year, it's already here when you think of the Trump effect. And in many ways, we've got another spat on our hands between President-elect Trump and this time Panama Canal. Now, take this. At the moment, we are hearing that he is suggesting on Sunday that Panama lowers its fees or actually cedes control of the canal. Just take a listen.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Inauguration is not yet here, but we go to Mike Shepard in Washington because the impact is clear ahead of that, Mike. What do you make of these latest feuding going on?
Well, this is yet another world leader being put in the crosshairs of Donald Trump even before he takes office. The president-elect has already taken on China, Mexico, and Canada, the three largest U.S. trading partners, over the border, over the flow of drugs into the U.S., and with China also on economic grounds complaining that, they continue to engage in what he sees as unfair trade practices. And that, of course, is a complaint echoed by the current administration. But it extends more broadly, even to Europe, where he has been cajoling leaders there in sometimes forceful terms, warning of tariffs that they do not buy more American gas and oil. If they don't, they could see some consequences when it comes to tariffs. He has been using the word tariff a lot, even before the election, but since then as a policy tool as well. So this could be another area where tariffs actually come into play, or at least the threat of them.
And it's interesting when you're looking at this incoming Trump presidency and administration. What is the role of Elon Musk? It seems like it's a pretty prominent role here, yet didn't have the best of weeks last week when talking about some of the U.S. government shutdown issues.
Well, if you're in the Trump and Musk camp, in a way, they would see this as a win because they got to alter the course of what was going on in Congress. And they got to flex and exercise that muscle even before the president-elect takes office. And they jumped in the last second. Weeks of negotiations over a spending bill were upended by Musk goading Trump into opposing this measure, which was on course to pass, and then getting Congress to actually make a few changes, not all of them, but a few changes that they had sought. They shrank the size of the bill. They dropped a few provisions that they had thought were unnecessary and unrelated to the spending at hand. So they were able to alter the course of events even before they had the official power to do so.
It's not as though the market's particularly celebrating the aversion of a government shutdown. NASDAQ 100 turning negative. We're erasing some of our gains. Certainly the S&P 500 has been down. Just dwell a little bit on the next line of fire. We're going to talk about it later, but the Fed.
Yes, the Fed, and this is another target that Elon Musk has brought up in a post on X. He was saying that the Fed is too big, it has too many employees, it's overstaffed, and yet when you compare it to sibling institutions in Europe, for example, it doesn't have nearly as many employees, and there are 24,000 across the Federal Reserve System in the U.S., but that's 12 regional banks. It's a lot of people who do work that support banks that serve customers and businesses across the country.
All right, Mike, thanks so much for joining us. Mike Shepard, Bloomberg News, giving us the latest on musings coming out of Washington, D.C., the incoming Trump administration making headlines as we knew that it would. Markets selling off here. S&P off about 19 points. The NASDAQ off about 20 points, about 0.1% there. 10-year Treasury yields trading a little bit higher, 4.55% on your 10-year Treasury. We always take a look at oil, now below $69 per barrel. Coming up, the Nordstrom family is taking their store off the markets. We have the details on that deal next coming up. We always look at retail, especially during the holiday season. This is Bloomberg. Good morning.
A continent of vast opportunity and endless potential, but not without its challenges. Bloomberg highlights the players and unpacks the issues shaping the African story. We'll bring you interviews with key newsmakers and expert analysis, getting to the heart of business, politics, and economics in the region. I'm Jennifer Zabasaja, and this is Africa Amplified.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. It's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
All right, good Monday morning. I'm Paul Sweeney in New York City, Caroline Hine in London. This is a special edition of Bloomberg Markets on Bloomberg TV and radio. Let's take a check-in on Nordstrom here. I'm looking at the stock here. It's off 1.2%, but it's up 30% year to date. The retailer is set to go private in a deal valued at over $6 billion. The Nordstrom family, they're going to acquire all the outstanding common stock not already owned by them. And here with more is Bloomberg's Emily Cohn. Emily, thank you so much for joining us here in studio. Nordstrom, why are they going private?
So we have Nordstrom here, a retail giant that's really been struggling. It's been struggling to compete with fast fashion. It's been struggling to compete with discount chains like TJ Maxx. So we have the company saying that they think they can do a better job navigating this tough retail landscape, taking the company private without the scrutiny from Wall Street, so they can really focus on their operations.
What does that look like, Emily? Does that mean cost cuts? Does that mean job cuts? Does that mean a tougher period to come if you're part of Nordstrom?
I think that's still to come. I think we don't know, but I think probably all of those things are on the table. This company has, it was once worth $15 billion, I believe, in 2019. Now it's going for $6.25 billion. The stock price has plunged 40% in the last 5 years. So there's a lot that needs to change.
Emily, there's a lot of Nordstroms in this management team, in this ownership. How does the street view this family ownership in terms of being managers?
That's a good question. I think there's a lot there. I think the company has invested a lot in its rack business. That's the discount chain that's competing with TJ Maxx. I think they've seen a lot of growth from Maxx in recent years. I think you might be seeing more investment in that. That's definitely been better than expected part of the business. That's the part that competes with the TJ Maxx, and you get stuff that is very discounted, and that's sort of like what consumers these days are looking for when they're shopping.
They sure are. Let's just talk a little bit about a Mexican involvement, because 50.1% is going to be held by the Nordstrom family. But then a Mexican department store owner is coming in and taking up the rest. Is that about agility? Is that about finding strategic investors here who know how to operate?
Yeah, I mean, I think it's also about the cash, and this is a big department store chain in Mexico, and they're helping finance the deal.
Okay, money on the table always helps, as does a little bit of operational flexibility, I'm sure. Great to have time with you. Thank you so much, Emily Cohn, all over this story. Big $6.25 billion deal for Nordstrom. Let's just broaden this out, Paul. Let's talk about the retail industry going into 2025 when we get those pretty ugly consumer numbers in terms of confidence today. And we're pleased to welcome Jennifer Bartashes. She can do that with us, of course. She is of Bloomberg Intelligence. And Jennifer, push us forward as to what we're looking like from, we've got a Nordstrom signaling that they want to go private. They need to rework and re-energize their business. How is the rest of the high street set up for 2025?
Good morning. So one of the things that we're looking at is really the consumer is doing well, but it's about where is their focus, and the focus is on value. And so what we're seeing is across the entire industry, a lot of retailers trying to reorient their operations in a way that presents value, however that might mean to their core consumer. So for Nordstrom, you may see that pivoting in terms of the way they do their assortment, but for retailers like Walmart and Target, it's about price and it's about selection.
And there's a great story on that, Jen, on the Bloomberg terminal today. Leslie Patton and Jaewon Kang have this story. The headline's just a great headline. Kirkland for Christmas. Shoppers ditch logos for store brands. That kind of goes to your value argument. How do you see that with the stores you cover?
Yeah, value is as I said, it's of utmost importance, but private label had a great year in 2024, and we actually see that momentum just continuing in 2025. So Kirkland is Costco's own brand. It is over 30%, almost 35% of their sales, and it is just a trusted brand to the point where consumers no longer think of it as a private label alternative to national brands. They just see it as a brand in and of itself. Walmart, Target, Kroger, Albertsons, these companies have all invested in private label in the last year, last several years, and it's really starting to pay dividends because it's value, it's novelty, and it's something that consumers are really resonating with.
To get that data, to understand that it's resonating with the consumer, they're having to be leaning into all the data points largely through digital investment, I'm sure, and through artificial intelligence. How is that something that they're not just plowing money in, but getting the rewards back?
Yeah, the rise of retail media is really the answer to that question. And when we look at the industry, actually last year, we made a prediction that retail media would be up by over 20%, the revenue associated with it for 2024, and it looks like we're going to exceed that. And it's on pace to continue that kind of momentum into 2025. So retail media is really advertising, and it's the selling of ad space, it's the selling of search results, and it's the digital products such as you see online, as well as digital screens that you see in stores. And so retailers have really been unlocking the value of that and are finding that it's a way to bring a high margin, very low overhead business into their mainstream core.
You know, Jen, that's a business, for better or worse, I have experience with. Back in my banking days, we tried to finance a bunch of those companies because we felt like, you know, just like you said, they're captured customers. They're at the point of buying. What a great time for video to be introduced there in terms of advertising. What does it mean for the big retailers? What are the economics to the big retailers for this media?
So this media carries a margin of 80%, and when you think about retail staples, you're talking about operating margins in the 3 to 5% range, right? You're talking about gross margins in the high teens, low 20s. So the ability to have a revenue stream with such a high margin is very appealing to these companies, and they have the data. They have all this first-party data that they can monetize, and so it really is a very effective partnering. And one of the interesting things that we're finding is that there's always been historically investment from, say, packaged food companies into retailers for placement on shelves and things like that. But we're finding that retail media is actually incremental spend. So that's actually an even bigger tailwind for these retailers as they get deeper into this new revenue stream.
In many ways, everyone takes a leaf out of Amazon's book in the end. I'm interested, Jen, a little bit more about the pure data side of it and the forecasting side of it. We go to you to help us forecast what the retail looks like. How are the companies themselves forecasting in 2025?
Well, it's been interesting because what we've really seen were in 2023 and 2024, we saw some initial pilot cases of the use of AI, for example, to help with demand forecasting. And we're seeing that those pilot programs have been successful and are being more widely rolled out across organizations at places like Kroger and Walmart and Target. And you know what that really means is that they're getting more efficient and smarter about understanding when they need product and where they need product. That then goes all the way back up the supply chain and makes them more efficient as an organization. And so, you know, that kind of cost-cutting initiative is good from a operation that what they want will be in the stores or online available at the time they want it.
And Jen, what I learned from you a while back, which shocked me, still shocks me, who's the #1 supermarket in the United States?
That would be Walmart. Over 50% of Walmart's sales come from groceries. And they hold a little over 30% of total market share in the United States, which is pretty significant.
And yet the regulators won't let Albertsons and Kroger get together.
You know, it's the end of a 2-year saga. You know, when we first heard the announcement of that merger, we thought it was actually good for both organizations. But in this instance, the FTC prevailed. The merger is now dead. And Kroger and Albertsons will just have to, you know, continue on their own individual strategies, and we'll see how that unfolds.
Jennifer Bartashis, great to check in with you. All important look ahead to 2025 retail and a bit of a look behind us at that M&A deal that went very sour. Thank you so much to Bloomberg Intelligence. Look, we push it forward because what affects the consumer, but macroeconomic policy, the Fed. We're going to be delving just into that. What are the outlook for 2 cuts? Will we actually eventually still see 3? And what of Elon Musk's criticism? There's just too much pork over at the Fed. We're going to be discussing that all with Julia Coronado. She's, of course, of Macro Policy Perspectives president there. This is Bloomberg.
Names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, 30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
All right, good Monday morning. I am Paul Sweeney here in New York. Caroline Hyde is with me as well. This is a special edition of Bloomberg Markets on Bloomberg TV and radio. Quick check of these markets here. A little bit of red on the screen here. The S&P 500 is off about 12 points. The NASDAQ off about 8 points. That's just fractional down on the downside. Looking at the yield curve, 10-year treasuries up about 4 basis points, 4.56% on your 10-year. I'd like to look at commodities as well. Just looking at WTI crude oil off just fractionally here, down below $69 per barrel. And for Tom Keene, I will call out Bitcoin. It is off about 1.9%. About $93,000 per token. Remember, we were just at $107,000 per token just about a week or so ago, so some big moves there. San Francisco President Mary Daly said she is very comfortable with policymakers' median projections of 2 interest rate cuts next year. She spoke with Bloomberg after the latest Fed decisions. Take a listen.
It's about the data. It's always about the data for me. We don't know what the incoming administration is going to do. You know, new administrations, no matter when they come, always put a slate of programs together. And really, as a policymaker, I want to see the net effects once I see clarity about what those policies will be. So I was focused on the incoming information and what it means for the outlook. And today, I feel like we've got policy in a good place, the economy's in a good place, and we're prepared for whatever comes before us.
What happened in the past 3 months that caused the Fed and perhaps yourself to be much more concerned about the stickiness in inflation?
Well, the data happened, and you look at the data, and what's happened is that there's two things that have occurred. First of all, the economy remains in a good place, and the risks to the outlook are equally balanced between a risk to inflation or a risk to employment. That's where we wanted our goals to be. And we adjusted policy when we had confidence that inflation was heading down, and we adjusted policy some more to ensure that we have a balanced labor market that continues. So that's where we are. But then the data on inflation have been coming in a little slower. I wouldn't even say sticky or stalled. I would say the progress has just slowed relative to what we had wanted, but that's a typical pattern. It's bumpy. As you get to the, from 2.5 or 2.8 to 2, it's just a bumpy path. Yeah, go ahead, please.
But at the same time, some people were wondering if there was this stickiness, and I'm looking right now at, say, the Cleveland CPI now, and it actually has ticked up for the month of December from November. There was this question, why did the Fed cut it all?
Sure, and again, I'm going to reassert that it's bumpy. Remember earlier in the year, we had 2 months of data and people said, oh my gosh, it's reaccelerating, and then we had it come down. So inflation data, you can't focus on 1 month or 2 months. The most important thing for me was that we needed to recalibrate policy. I saw this as a close call. Was 75 enough to be the recalibration we were looking for, right-sized policy to meet the economy we expect, or do we need more? Ultimately, I determined that the 100 basis points was really the right level. Now I feel we've got that recalibration phase behind us, and we're in the next phase. And the next phase is really looking at the incoming information. We can return to a more typical pattern of gradualism for the Fed. We've practiced that where with a lot of uncertainty, you adjust the policy rate, then you wait watchfully, and you see what transpires, and then you make further adjustments. That's the phase I think we're now entering.
Wow, Mary Daly there, of course, of the Fed. Let's dwell on macro policy a little bit more. Gillo Coronado's with us, Macro Policy Perspectives president. And of course, you're the founder too. You once upon a time were a key researcher over at the Fed. So point us into 2025 and the clarity we need, because Friday, a bit of a relief in terms of the inflationary signals that we got, but certainly we'd all been rocked by what the Fed had been telling us earlier.
Yeah, that's right. Their messaging that we got at the December meeting was a lot sterner than expected, with only 2 cuts and just a general tone of concern about inflation. And I think, when we look at the data that's come in, it's fair for President Daly to say that, it's the data have been disappointing on the inflation front. But this wouldn't have really happened if it weren't for the risks to inflation in the outlook. And they can't really pinpoint them or put too fine a point on what's likely to happen. But every major policy prong of the incoming Trump administration could potentially be inflationary. So you can see they released their assessment of risks to inflation and unemployment, and the change in upside risks to inflation really moved at the December meeting. So we don't know the specifics on policy. Yes, we have to wait and see what materializes and how that feeds into the data, but there's a direction of travel here that's of concern to the FOMC broadly speaking. This was a big move across a lot of participants. And so, they want us to be on watch for that.
Have you been running the numbers and with a best case, worst case scenario? Yes, we don't know the direction exactly of where policy will go, but we've been on this rodeo before and there's been tough talk about tariffs in the past.
Yes, and we got tariffs in the past, and we did see them flow through into goods prices. The difference was that we were in an environment in the first Trump administration where inflation was running low and in fact below the Fed's target. So they could be very sanguine and patient and sort of accommodate the increase in goods prices that came with the trade war. This time around, we're in a different environment. They've just reestablished credibility. They've just brought inflation back down, not even to their target yet. And so, the threat of a round of tariffs and an impulse into goods prices is more meaningful. Now, the thing that they're going to have to grapple with, and we saw that also in last trade war, is trade wars also destroy demand. That spike in prices isn't good for consumer purchasing power and is unlikely to be accommodated like it was during the pandemic, with a lot of fiscal support to households, directly to households, which helped the economy weather the inflationary shock during the pandemic and sort of stay on track. In the first Trump administration, we actually saw the trade war dampen economic activity, put the global manufacturing sector into a recession, and the Fed actually ended up cutting rates in 2019 to take out some insurance against that manufacturing recession broadening into the service sector. So, you know, very different circumstances. This could weaken the economy. It could cause inflation. It could do both. And then the Fed's mandates go in different directions, and they have to make a judgment call.
Julia, so, you know, tariffs are clearly an issue. What I've heard from a lot of folks is restrictive immigration policies, perhaps forced deportations, that impact on the labor market, that might even be even more inflationary going forward. How do you view that risk?
Yeah, no, absolutely. And I think that is definitely something we are likely to see. That is one of the main promises of the campaign, and we can already see the appointees and the plans being put in place to implement this policy. And let's not forget that immigration, that plentiful flow of immigration, while it became a political hot potato during the election, it's unambiguously positive from a macroeconomic standpoint. We had abundant labor supply. It helped growth, it helped demand. So immigration is good for the economy, and to even just turn off the spigot, let alone turn around and, you know, cast a shadow over the labor market and deport some workers, it's going to change the macro environment. And yes, in areas where the most targeted population, the undocumented workers, are employed, food services, construction. I have conversations with people here in Texas, people in the real estate industry that are pretty worried about the availability of workers as early as next year, as early as the spring building season. So this could be very material. It could bring higher prices. It could also just slow down building activity because you just don't have the people that you need. Similarly, for food, availability of certain crops and the prices of those would likely spike. So leisure and hospitality, another industry that relies heavily on an immigrant workforce. So yeah, we could see that ripple across numerous sectors in the economy. And it could be, you know, by mid-year, we're seeing some material constraints and some price increases on the back of that.
You know, and Julia, it kind of goes to that consumer confidence number we got today. Came in, you know, weaker than expected, and the expectations looking forward were weaker than expected. That actually surprised me because I've been talking to a lot of our guests since the election about a palpable sense of optimism in this country since the election, particularly as it relates to economic outlook, reduced taxes, and so on and so forth. How do you think about the consumer and consumer confidence? Did that data surprise you today?
So I was just digging through those details. And of course, the optimism depends on who you ask. So you're probably talking to a lot of market participants who have experienced the rally and are looking forward to maybe reduced regulation in the finance industry, maybe some corporate tax cuts. But when you look at consumers, well, there's a lot of uncertainty as to how this mix of tariffs and immigration is going to affect more the average consumer. And when I looked at actually what was interesting, you could see a little bit of a political footprint here when you look at it by region. The Conference Board doesn't have the breakdown by political party like the Michigan sentiment measure does, but you can clearly see sort of the South confidence going up, but in the West and the Northeast, the confidence going down. So, you know, we are a 50-50 country. We always have been. Some people are feeling better. Some people are feeling a lot worse. And it really depends on who you ask.
What about stockholders? Because, boy, 2024 should have been the year that made everyone feel pretty good. It's, if you've been long AI, if you've been long S&P, NASDAQ, bigger benchmarks. And then it just tails off in the last couple of weeks. So how did sentiment around being an asset holder right now feel?
Yeah. Well, that's what was interesting about the numbers, right? It was the expectations component, not the present situation. We have been on quite a tear in the stock market. And of course, you all know that it's been very, very concentrated in a handful of names that are related to the AI, you know, sort of euphoria. But, you know, now we're moving into the expectations meets reality phase of a change in administration. So by the end of January, we're going to know a lot more about this mix of policies. And yeah, some are growth positive. and some are growth negative. And so different industries are going to experience that differently. The tax cuts, I think one of the things that we just saw with the budget dogfight is that it's a lot easier to talk about tax cuts on a campaign trail than implement them in a very closely divided Congress. And even within the Republican Party, while they hold majorities in both houses, there's a lot of different views on the correct direction of fiscal policy. So we sort of imagine it's going to take most of the year to legislate anything meaningful on the fiscal front. They want to push forward a border package early. We'll see how that plays out. I assume they're going to be able to get a lot done. But remember, again, very different from last time. Budget-wise, the U.S. fiscal position is a lot worse than last time. And so that room for maneuvering is a little tighter, and their ability to enact something that's really going to change the backdrop is more limited.
Hey, Joy, about a minute left. How do you put in Elon Musk into your calculus here?
Elon Musk is going to be a noise generator at a minimum, and certainly will be, as we saw with this budget fight, fighting for things that are good for his companies. But I think what we also saw in the last week is that he's not going to just get his way. He's going to talk a lot. Do I think he's actually going to be successful eliminating the VA health care system? No, I do not. So, he's going to run into constraints. He's not an elected official. He actually doesn't have any sort of direct lever that he can pull. And these elected officials have a lot of views about the programs that they want to protect and their constituents that they want to serve. So I think it's going to be messy and loud and harder to extract the signal from the noise.
Currently, his eyes are on the Fed. Absurdly overstaffed. This is current take.
Absurdly overstaffed.
We'll see how
I looked at this number. The Federal Reserve entire system employs 0.012% of the 0.12% of the workforce. That's tiny. What do we get for that? We get oversight of the banking system, monetary policy.
We need to leave it there. But
Okay.
Thank you for weighing in. Good context. It's everything here. That's Julia Coronado. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Sorry.
My voice and my conversation, my poetry, you know.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
All right, good Monday morning. I'm Paul Sweeney in New York along with Caroline Hyde. This is a special edition of Bloomberg Markets on Bloomberg Television and Radio. Looking at these markets here, a little bit of red and green on the screen here. Not a lot of direction. The S&P is off about 15 points. That's 0.25%. The Nasdaq's up about 3 or 4 points, just fractionally here. Volume's a little bit muted here today. In the yield space, the 10-year Treasury up about 3 basis points, 4.55% on your 10-year U.S. government security. Looking over the commodity space, WTI crude oil is a little bit weaker, below $69 a barrel. Gold just a little bit weak, $2,610 per ounce. Let's get a look at the cruise business. Carnival's initial outlook for 2025 bolstered confidence that record levels of cruise demand will continue into the new year. CEO Josh Weinstein spoke with Bloomberg's Carol Masser and Tim Stenovich. Take a listen.
If you think about what was our booking activity, how much activity did we generate in the last quarter? So from the period of September through the end of November, that beat last year, even though we had less to sell. So we sold more for 2025, and we sold it at higher prices versus same time last year. And at the same time, we set a record for booking activity for the following year out. So in this case, 2026. So things are moving really positively across the board. And the great thing is, this is broad-based. So when we look back at 2024 and we look at our portfolio of world-class brands, we were actually higher, mid-single digit to mid-teens percentage-wise in our yields in the revenue we generate per person per day across all of our major brands, all of our major trades. So it's really gratifying. The team, our global team, has done a phenomenal job, and really a shout out to each and every one of them for doing what they do.
Okay, this maybe sounds a little bit stupid, but why do you think this is happening? I mean, and I'm just curious, what it is it? Tell us a little bit about it. Remind us, because you do have a portfolio of brands, and it reaches across different consumers, if you will, of your brand. So give us an idea of why you think you are still seeing kind of record bookings.
We'll need an hour, right? I mean, there's so many reasons. The principle, and I remember being on with you a year ago and talking about what we'll call the price to experience ratio, and the price to experience ratio of a cruise versus the price and what you pay for a land-based alternative is nuts, right? I mean, the value that you get from a cruise for what we provide is night and day to what you can get on land, and people are recognizing that. And so we are casting a net much wider into the general population for people who will now consider cruising as a vacation alternative, people who have never cruised before. As a matter of fact, in 2024, we had over 10% more new to cruise than we did the prior year. So becoming more mainstream, breaking down myths, and that value gap is real. So we can still increase our pricing, as we've been doing the last few years, and be an incredible value.
Sold on one yet? We'll see. Of course, CEO of Carnival Cruises there, speaking with Carol Masser and Tim Stenovich. Let's turn our attention, though, to autos now, because there is a big deal now being confirmed over in Japan, Paul, and it's not coming till 2026, but it's going to take a long, hard tie-up. There's also a lot to talk about in Europe as well. We do it all with Craig Trudell, who's sat here in London at the moment. And Craig, just take us over to Nissan and Honda. A deal done?
Yeah, this is going to play out over quite a while, as you alluded to. I think, real questions about, just how happy shareholders across the various companies involved are going to be with this. To put it plainly, I mean, this is really Honda coming to Nissan's rescue, and that is sort of, the writing is on the wall there in terms of looking at the terms that these companies talked about in Tokyo Monday. Honda will, take the lead in forming this holding company that Nissan will be a part of. Maybe Mitsubishi Motors will join. And the big question is, where does Renault stand in all this as Nissan's biggest shareholder? Will they be content to move forward with this style of deal?
So, Craig, how's Honda and Nissan, how are they positioning this new co? Is this going to be competitive with the Fords, the GMs, the Volkswagens of the world? Where does it want to be?
I mean, in terms of scale, it will be, one of the bigger car makers in the world. I think, if we just look at, annual sales, I mean, maybe somewhere in the third or fourth largest. But in terms of, where it's directionally heading, Nissan in particular is shrinking in dramatic fashion. Mitsubishi Motors is far and away the smallest of the three. And there's real concerns about the state of Nissan and, just to what extent Honda would want to sort of, hitch its wagon to Nissan, given the track record that it's had, really since, we're talking about, Carlos Ghosn leaving the picture in 2018. We've really seen just a steady deterioration in the state of that company. And, the product portfolio is not in good shape. There's not a whole lot of reason for optimism. And so this is, potentially a distraction within an industry that is just, extremely, extremely competitive and getting more so with the rise of Chinese companies like BYD.
And look, since 2018, there has been significant disruption around the world for autos. The rise of EVs, the rise of Tesla in the United States, the rise of them coming into China and taking Tesla's lunch there. And then you think of Europe and you think of Germany that had been, the beauty spot for all things autos. VW clearly showing that this time it's still hurting.
Yeah, and we saw that toward the end of last week, where for months now, management has been pushing for restructuring of the VW brand, which, has long clearly been an issue for the company. It's just not been competitive. It has, long had really, really sort of thin profit margins. Management wanted to nip that in the bud and really, do something that is long overdue. They were not able to do that. They wanted to close as many as 3 plants. All the factories in Germany for VW will remain open, but there's yes, there's going to be some capacity reductions, but I think we've seen the shares react in a way that's, sort of suggests a bit of a letdown in terms of what management was pushing for versus what they were actually able to extract from labor, which, as we know, they are structurally in an extremely strong negotiating position in Germany.
Craig, as we step back from 2024 and think about 2025, what's the feeling within the global auto industry about how this evolution to electric vehicles is going to take place? Because I would argue that 2024 wasn't necessarily a great year. It felt like momentum in certain parts of the world, particularly here in the U.S., might have slipped a little bit. What's the feeling within the global auto industry about this transition to EVs?
I think that's a really important point that's sort of, a part of the broader landscape here, right, where it is both the case that the industry needs to move in this direction. Regulators are really, continuing to put the pressure on these companies to make that switch. And yet we have a situation where the consumer, I think, really kind of was reluctant in 2024. To your point, we saw a real slowdown in momentum for electric vehicles. Some real questions about, just how, keen car buyers are to go fully electric. In the U.S. market, hybrids have had a banner year. And I do think that that's part of what's coming into play here for Nissan. Is this is a company that, years ago, was actually in a pretty competitive position. It was out front with the Leaf. However, that car really sort of flopped, and the company has not really reinforced that bet with competitive EVs. And so, I think we're seeing drastic measures to try and deal with this really uncertain environment and future for this industry.
But Craig, briefly, governments are taking drastic measures as well. Just think of the numbers from Chinese imports into Europe, absolutely curtailed at the back of these 35% tariffs by the EU.
Yeah, that's absolutely right. I think, government is likely behind this Honda-Nissan combination. We may see in Europe some softening of targets. We may see that in the UK as well in terms of CO2 emissions reductions and EV mandates. So it's definitely, I think we're in for a turbulent 2025.
All right, Craig Trudell, thank you so much. We appreciate that. Craig Trudell covers all the autos for Bloomberg News based over there in London. And Caroline, again, I just bought a car, and I bought the old-fashioned internal combustion engine. But at some point, I guess we're all going to be going electric.
I have to say, for my sins, I have a Tesla, so
Nice.
I'm helping from an environmental perspective.
Very good.
I do have the bumper sticker that I get a lot of love notes about that I happened to buy it before I thought Elon Musk went a little bit crazy.
Right.
But it's notable that we're all in seeing this hybrid model take over in the US. We've got some hybrid conversations coming up when it comes to bond markets, stock markets. Paul, there's a lot to discuss in the next hour of programming.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people,
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment. Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture. It's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl,
I
right?
can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control 1/3 of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
A continent of vast opportunity and endless potential, but not without its challenges. Bloomberg highlights the players and unpacks the issues shaping the African story. We'll bring you interviews with key newsmakers and expert analysis, getting to the heart of business, politics, and economics in the region. I'm Jennifer Zabasaja, and this is Africa Amplified.
All right, good Monday morning from New York City. I'm Paul Sweeney in New York. Caroline Hyde joins me. She's in London. Welcome to a special edition of Bloomberg Markets here on Bloomberg TV and radio. Looking at the markets here on this Monday morning, S&P 500 is all off about 15 points, 1/4%. The NASDAQ up about 12 points. The Dow, I'll call that out for John Farrow. It's off 300 points at 0.7%. In the bond market, a little tick higher in yields here, about 4 basis points on your 10-year. So we're sitting at about 4%. 0.56%. WTI crude oil, I watch Landman now, so I'm an expert on the U.S. oil and gas industry, so I can tell you what's happening. We're below $69 a barrel. They're still making money there, but they would like it, I learned, between $60 and $90 per barrel. That's what the folks down in Texas like, so that's what's happening there. Let's check in and see what's happening underneath the hood here on these markets. Alex Semenova joins us here in our Bloomberg studio. Alex, what are you looking at?
Great to be on with you guys. So we know that investors have been enamored with artificial intelligence stocks for the better part of the last 2 years, but quantum computing is emerging as a key theme to watch in 2025 as investors look for plays on this technology momentum outside of AI, outside of semiconductors. And some of those names in the space are doing exceptionally well today, even as the broader market slumps. I'm taking a look at D-Wave Quantum, Rigetti Computing. Those shares are each up more than 20%. Quantum computing also up about 6%, and this is largely being driven by optimism around Alphabet's Willow chip capabilities. The Google parent, of course, touted its optimism around the quantum computing chip as a breakthrough. That has helped send Alphabet about 30% off of its September lows, and also sending some of its peers in the space higher, as we're seeing today. And quantum computing has kind of provided Alphabet with a positive narrative as it kind of lags behind some of its AI competitors and also faces antitrust risks. It's now among the top 20 stocks in the NASDAQ 100 this year. I do want to point out that this quantum computing theme is, again, it's a trade that is based entirely on potential at this point, not on fundamentals. If you take a look, for example, at D-Wave Quantum, that's ticker QBTS, it has a roughly $1.8 billion market cap, but only $9 billion in revenue.
$3 billion if you're Rigetti. It is up 1,000% over the trading year. And I get it from the exuberance around the Willow chip. I mean, that really is some significant movement here, and just retail desperate to get in. These ETFs that are built around some of these quantum stocks, absolutely sensational. Thank you to the production team for getting that long-term chart up so quickly. But Alexandra, I mean, dig into some of the, dare we call it, memeier trades out there. We could fold in crypto into the next one, because Tether, key stablecoin provider, is taking a chunk in a media company, Rumble, which is right of center. Has Peter Thiel involved?
Yeah, investors are clearly piling to anything that seems exciting right now, even as we see market breadth deteriorating under the surface. And Rumble is a perfect example of that. I'm looking at the move on the stock right now, up nearly 95%. This is, of course, the most on record. And this is after they said that it would receive a $775 million investment from the crypto company Tether, which, of course, makes stable coins. Rumble is set to use about $250 million of that to strengthen its balance sheet and accelerate growth plans. They'll also use the remaining proceeds to fund a self-tender offer. That's when it buys back its stock from shareholders. And news of the agreement came less than a month after Rumble's board approved the purchase of up to $20 million worth of Bitcoin. I always like to read off some of the analyst commentary here. Nice. Oppenheimer, they say that the tender providers insiders an effective diversification without affecting share price, and that that selling primary shares at an attractive valuation will further bolster the balance sheet without meaningful change to its strategy.
All right. I look at the, just for what it's worth today, the Russell 2000 off about 0.7%. What's the concern in the market, Alex, about just breadth in the market? Is it all just Mag 7, or is there better breadth in the market?
Yeah, so we, for a while, we're seeing breadth starting to improve. But of course, last week we came off of 14 consecutive days of negative breadth, which is the longest streak on record. And basically, this is resemblant of a late stage cycle where the market is just clearly getting very exhausted after 2 consecutive years of returns of more than 20%. So right now, we're kind of back to trading on thin breadth, of course, with the holiday season and investors mostly away from their desks. Any kind of sign of potential disappointment like we got with consumer confidence today could really weigh on investor sentiment as we're seing the slump today.
All right, Alex, thank you so much for joining us. Alex Semenova, she covers all the equity markets for Bloomberg News, joining us here in our radio studio. Let's get back to a conversation on these broader markets and themes for 2025. We do that with somebody who does this stuff for a living. Shana Sissel, Banryan Capital Management, joins us. Shana, I have to start with valuation because we've seen, again, a 24% move in the S&P 500 this year. And I don't know, I don't have my calculator with me, but I don't think earnings have gone up a commensurate level. How stretched, if at all, are we on valuation for this market?
Depends on what you're looking at. We're stretched in some areas of the market, namely big tech, but there are other areas of the market that haven't participated in the rally as much. And those areas are slightly more attractive. If you are selective, you can absolutely find attractive stocks with reasonable valuations in the market even today. And we've seen a bit of a sell-off as well, so there's a little more for the picking, in the last week or so.
Okay, I'm going to go single name. Don't worry if you don't want to comment on single names, but I'm looking at 46 times future earnings is where NVIDIA trades, for example. We're still above that $3.3 trillion market capitalization. However, many would still want to get into this name. So when you type up analyst recommendations, I mean, still significantly more buys than sells in terms of recommendations. In fact, 0 sell recommendations on NVIDIA and 70 buy recommendations. So how do you fight that sort of narrative, even though the valuation isn't stupid? We're not looking at Palantir levels in terms of valuation, more than 140, but you are still seeing valuations that have been questioned.
Yes, but NVIDIA's always traded at a premium. It's always had strong momentum. There's certain things you don't really fight against, and having a somewhat premium valuation, but not one that is outrageous, has never actually hurt you. If you look at the history of stocks that traded, a 20% premium to the market, or in this case, I think the market's at like 20 times, so it's at a 50% premium to the market. But that said, it's not necessarily something that's overly expensive. And I always like to remind people that your valuation metrics of future earnings is only as good as the E that it's based on. And so NVIDIA has done a good job beating its earnings expectations. And as long as that continues to be the case, the actual valuation of the stock on its future earnings is probably more attractive and more reasonable than the 46 times that we see today.
I mean, revenue has been absolutely extraordinary when you're looking at previous this year. I mean, the extent that they've risen, what we're expecting 130 billion to have been brought in. That's more than double on a year-on-year growth perspective. Is there a broadening out to happen here, though? Like, we heard such a pertinent question coming from Paul to Alexandra earlier, is just what about breadth? And many have talked about just other parts of the AI play, money going into the energy sector, money going into Broadcom, other chip makers that are out there that can get caught up in the AI hype. Are we going to start to see that for the smaller tech industry?
I'd like to say yes, but we've been saying that would be the case for a while. The one bright spot is that I've been a bull of Marvell for a while. And for like the first half of the year, that stock did not look particularly good. It had not done well. But as we've gotten into more of this custom silicon chip discussion and the development of the next stage of AI, Marvell has completely changed course and has actually done quite well in the second half of the year. And so we actually are starting to see it broadening out. Broadcom is another one that in the last few months has really seen a rally. As people are looking for ways to play on the AI trend and get into names that maybe haven't participated previously. You also pointed out, there was a name that you brought up, Rigid, and one that I'm not even familiar with that's on the
Rigetti, the quantum stock.
Yeah, yes, there you go. It's on the quantum computing side. Again, moving into that AI, quantum computing and AI are sort of cousins, if you will. And the trend into needing more computing power, more energy, all of those things are true. There's a number of names that have benefited from that maybe we don't talk about nearly as much, but it certainly is happening. And the breadth of the market hasn't really been there at all in the last year. But there's reason to believe that we'll start to see more breadth in the market as we have continuing strong economic conditions here in the U.S. And inflation is a little on the higher side, but generally speaking, inflation around 3% is advantageous for stocks and for earnings. So, there's a number of tailwinds that I think will hopefully start to see breadth improve in the market. But there's certainly opportunities to play that AI quantum computing trend beyond NVIDIA.
Shana, did your investment outlook, or maybe just kind of the discussions you have with your clients, did that change materially the day after the election when we kind of realized that we're going to have a Trump administration coming in again and we're going to have a Republican-controlled Congress? Did that change your outlook at all?
Not in a meaningful way, but I will say that it became slightly more bullish. And I think that the vast majority of clients were relieved to see a second Trump administration, whether they'll admit it or not. I think the general belief in the business community was that a Trump presidency was better for business than a Harris presidency. And so generally speaking, I think there was kind of like a sigh of relief when we had the election results. But I remain somewhat defensive in that, the Fed's comments and the Fed outlook is not necessarily as conducive to a really lax monetary policy that would really push stocks higher. And there's still some concern that inflation isn't completely under control. We've seen Treasury yields obviously increase. We still have housing market issues. So it's not, a perfect economic scenario for, continued bull market, but it's certainly slightly better than it would have been otherwise.
Given all that background there, Shana, what's your key theme for 2025 that you're going up to with your clients?
I continue to be an alternatives person. Yeah. I obviously, there's a number of single name stocks that I like: Marvell, Leidos, NVIDIA, Apple. Those are all names that, we've talked about in the past. But at the end of the day, I continue to believe that the place to be going into 2025, especially with the Fed outlook being the way it is and the bond markets reacting they have been, is more in the alternative space, finding opportunities in things like managed futures, like CTA, and momentum-based stocks like SAMT or ETFs like SAMT, a little bit defensive with something like BTAL. There are a number of different names out there that I think are good to have in your playbook, maybe instead of fixed income, that will do better in a volatile fixed income environment. So those are kind of how I'm positioning. And that's kind of my theme for 2025. I was more equity biased in 2024, but in 2025, I'm a little more defensive, but not using fixed income as my downside protection, more focusing on using alternative strategies, which can still get some upside from the equity markets if positioned correctly and sort of deal with and dampen the volatility of the fixed income markets, which I think we'll see quite a bit of in the next year.
Talking us cross-asset and some of those alternatives trade as well. Great to have you. Thank you so much. Of course, been talking all things with Shani there, Sissel as well. Let's just talk a little bit about drug maker Novo Nordisk coming up. We're going to be delving into the world of biotech. Look, we're up 5% reprieve from the sell-off that was hard on Friday. We dig into why. Remember, it's the biggest slump for this particular name in more than 2 decades. This is Bloomberg.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Good morning, I'm Paul Sweeney in New York City, Caroline Hyde in London. This is a special edition of Bloomberg Markets on both Bloomberg TV and radio. Taking a quick look at these markets, a little bit of mixed trading here. Volume, I'm noticing, is about 20% below average. Not really a surprise here given the holiday week. We've got the S&P 500 off 3 points, that's just fractionally. The NASDAQ up 68 points, that's 0.3%. So no real direction there. Yields slightly higher. Got the 10-year Treasury yielding 4.56%. That's up 4 basis points. In the commodity space, WTI crude oil off about 50 cents, just below $69 a barrel. Gold a little bit lower as well. Bitcoin off 2%, $93,000 for the Tom Keene crypto check there. Let's get back to look at big pharma here, particularly Eli Lilly. In the year ahead, Eli Lilly, they're going to begin studies to see if its blockbuster obesity drugs are also effective at controlling addictive behavior like alcohol abuse, smoking, and drug addiction. CEO Dave Ricks spoke with David Rubenstein earlier this month at the Economic Club of Washington. Let's take a listen.
We've talked a lot about like cardiovascular health, diabetes, these conditions that ones think about with being overweight. But these medicines, we think, and we've aimed to prove, can be useful for other things we don't think about connected to weight. These are often called anti-hedonics, so they are reducing that desire cycle. So next year you'll see Lilly start large studies in alcohol abuse and nicotine use, even in drug abuse. We'll also begin studies in anti-inflammatory conditions, because you don't think of that with weight, but actually there is quite a strong signal in anti-inflammatory. And then beyond that, David, we need to make important medicines for the long haul. We're an old company. We plan to be here another 150 years plus. And I mentioned my excitement about brain health. I think that's really the next frontier to make a big difference.
So have you ever thought about eating a lot, gaining weight, and then going to one of your drugs so you can actually experience it, because you don't use it because you're so thin?
I'd like to avoid that, but it might happen, and I wouldn't hesitate to use them. Yeah.
Yesterday you announced a $15 billion stock buyback.
Yeah.
Many people criticize stock buybacks. They say you should use your money to invest in your products and so forth. How do you respond to that?
Yeah, I don't understand that argument, really. A stock buyback is a way to essentially, by buying your own shares, you give the people who already own your shares the opportunity to sell at a higher price and get a return on their investment. I don't know why that's bad, but I would also point out in our current situation, we're spending almost more than anyone in the world on R&D already. We'll spend $11.5 billion this year on research and development. By the way, the country of Germany spends about $8.5 billion on all of its medical R&D. That's their NIH equivalent. So we're at the nation-state scale on R&D. We have announced investments of $23 billion in new capital in the United States for factories. We can't go faster. There's no more vendors to build plants faster than we're building right now. So returning some of the rewards that investors deserve for taking risk on the company seems like a reasonable thing to do.
Dave Ricks, CEO of Eli Lilly there, with our own David Rubenstein. Look, let's talk a little bit more about the fight against obesity, the whirlwind drugs that have sent shares parabolic over the last couple of years and then come down some. Think of Novo Nordisk, the big fall that we saw on Friday. We've got a bit of a recovery on our hands today, Paul, up some 5, let's call it 6%. But we want to discuss why, of course, we're worrying about the weight loss market with this particular name and how much of the market they hold. Bloomberg's Madison Miller is here with us. And Madison, just remind us, Friday's trade, why it was so painful.
So on Friday, Novo revealed long-awaited results for their next-generation obesity drug, CagriSema. And Novo had been hinting, and investors were hopeful that this drug could lead to 25% weight loss. And the drugs that are on the market right now, Novo's Ozempic and Wegovy, are around 15% weight loss. Eli Lilly's Zepbound is around 20% weight loss. So this 25% would really give Novo an edge to keep its lead in this fast-growing, hot obesity market. And what we saw was that it really fell short of expectations that investors had. It also fell short of the early promises that the company was making about this data. And so the shares really plummeted on Friday. And like you said, there's been some recovery today as investors think, okay, maybe the reaction was a little bit overblown, but it just goes to show how high the expectations are in this market. And if you don't deliver on those, you can get some consequences.
Well, speaking for a friend, Wegovy delivered 22% weight loss in about 7 or 8 months. So the stuff works, I guess. Where are we, Madison, on kind of getting to an oral type of weight loss drug where you don't have to do the injections, maybe just take a pill? Is that something, because that would seem like, boy, the next big focal point for this drug regimen?
Exactly, and that definitely is the next big thing. Eli Lilly has a weight loss pill called orforglipron that's in the works. It's in late-stage trials, and there should be some data in 2025, so that's a big thing to watch for next year. We have some other smaller biotech companies like Viking that's developing weight loss pills as well, and that is something that is going to be a big focus going forward, not just the most amount of weight loss, that 25% threshold, but also pills that are easier to take, drugs that have less side effects than the ones that are currently on the market, ones that can possibly be taken even less frequently than the ones that are taken once weekly right now. So there are other things besides this, percent or amount of weight loss that are coming soon and coming next, and that's one of the things that pills I think are kind of part of.
What's so interesting is this market is so vast, 130 billion thereabouts is what Goldman Sachs is estimating. No wonder everyone's piling in. But if you speak to David Ricks, and I was lucky enough to speak with him earlier in the year in a one-on-one, he's very much of the persuasion that this is now where they use their R&D spend on other areas. Cognitive decline. We've worked out how to help the body in a longevity perspective, but the mind is crucial. How are we starting to see companies focus on that for 2025?
Yeah, that's a good point. And that's something we're seeing with Lilly for sure they are taking their weight loss riches, so to speak, and investing it into other areas and into R&D, like he was talking about that in that conversation with David. And one of the big areas for Lilly is, neurodegeneration. They have an Alzheimer's drug that just launched, and they're looking to move it into earlier stages or testing it in earlier stages of the disease, also looking to next generation Alzheimer's products. Lilly's also super interested in pain management right now, safer pain drugs. And we have some biotech companies that are also working on neurodegeneration, Alzheimer's, Parkinson's. So that's going to be a big focus going forward. And, Lilly's also looking at how to take Zepbound into other areas like inflammation or Novo is testing actually Wegovy in neurodegeneration. They have an Alzheimer's study that is ongoing with these GLP-1s. So there's a lot of excitement about where else GLP-1s can go, and then, what kind of science that can unlock about the brain and aging and different neurodegenerative diseases.
Hey, Madison, I always joke that in my next life I want to come back as a healthcare M&A banker, because it just seems like every Monday we come in and there's another healthcare deal. 2025, the companies you speak to, the sources you talk to, is that expected to continue?
Yeah, it is. I think in all industries right now or across the board, there is some expectation that there's going to be maybe a more deal-friendly environment going forward. Dave Ricks actually said in this conversation with David that he was at Mar-a-Lago with Trump, with the Pfizer CEO, Albert Bourla as well. And so these conversations are going on already. They're getting in early with the incoming administration, hoping to talk about their agendas, and deal-making and M&A is obviously a part of that. So we'll see what happens, but I think there's some expectation that, the deal activity will continue going into the new year.
Oh, the merry-go-round in Mar-a-Lago continues of the who's who of the CEOs. Madison Muller, thank you so much for joining us today. Fascinating about some of these biotech and pharma stocks to track. We've got so much to be digesting. I mean, Paul, maybe in the current guise, you should be an M&A banker around retail, because today it seems to be where it's at. We're going to be debating the future of retail a little bit more. Look, consumer, that sentiment number came in well below expectations for today. We've got that sprinkling of deal activity happening, of course, with Nordstrom. Where does that happen in terms of going private? The $6.5 billion, a Mexican buyer coming in as well. We're going to be talking all things retail coming out next. Stick with us. We've got Arun Surandram, CFRA Vice President of Equity Research. From New York, from London, heading into Christmas, this is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot?
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice and my conversation, my poetry, you know.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture. It's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
All right, good Monday morning. Paul Sweeney in New York City along with Caroline Hyde in London. This is a special edition of Bloomberg Markets. We are simulcasting on TV and radio. How cool is that? Look at the markets here. S&P 500 absolutely unched on the day. I use that term unched because I know Lisa Abramowitz hates it. The Dow Jones Industrial's off a couple hundred points. That's about 0.5%. The NASDAQ up about 0.4%. 10-year Treasury yields 4.56%, up about 4 basis points. So kind of muted moves there at the index level. WTI crude oil just below $69 per barrel. Gold's a little bit lower here as well. Let's talk big banks. Let's talk the global investment banking, the view on the consumer. Bank of America CEO Brian Moynihan says U.S. consumers are still in pretty good shape. He spoke with Bloomberg's David Weston. Let's take a listen.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together, and he's a markets-oriented person. He knows that if it gets too far out of line, we just ran for the last fiscal year in the United States an operating deficit of $1.8 trillion, which is equal to the entire GDP of the country of Australia. So we got to realize that the impact we have if we don't get this debt back in line. So I think everything on one side has to be governed with whether to do on the other side to offset it and whether it has that much effect. Right now, the economy is moving along. Consumers are spending. It's up for the 2-week period around the holiday, Thanksgiving holiday. It's up 5% over last year. That is good and solid. That is not overheated at all. But that came off the lows a little bit this summer, where I was a little nervous that they're going to let the consumer drift too far down. So between interest rates being cut a little bit, between the enthusiasm around the election, the markets being up, the consumers are spending more and telling us they're going to spend more for the holidays, which is good for the general economy. We got to keep them in the game not by overstimulating, by overdoing, by keeping the game just by getting a good core economy going with good deregulation activities, good tax policy, good immigration policy. These are hard things, but I think they're off working on it.
Let's stay on the consumers here, because you know so much about the consumers here at Bank of America, given your relationships. How is the consumer doing? I know they're spending, but I've seen numbers that suggest they're borrowing more. And in fact, St. Louis Fed has new numbers out from as of October. The defaults are up as well. Are you worried at all about the consumer?
So this is go back to what you're thinking about, which is if you say the levels of consumer credit card debt are above where they were in 19. It's 5 years later. They should be above where they are in 19 because the economy is 30% bigger. So a lot of these nominal numbers, forget to put them in relative scale. If you look at it on a relative basis, it's still far below where it was in 19. And the credit was very good then. If you look at the defaults, they picked up and normalized defaults and delinquencies to where they were in 19. 2019 was a 50-year low in credit costs in our company. 50 years we had to go back to find. So we got to be a little careful about what we're comparing to. Everything's steady and fine now. Credit quality consumers, their ability to borrow, the household income, they feel a pinch of the higher prices. Part of that is real, and part of that's just mental. If the price of eggs doubled, it's hard to ever tell anybody it's okay because they have more wages. They're just never going to agree with us, and that's the economist's view of an economy versus a human being's view. But all things, if they wouldn't be spending money the way they are in a rational way at 5% year over year for the last couple of weeks, 3.5%, 4% for the month of November, and likewise it looks like that'll be December. If they didn't feel confident, and why is that? All comes back to one thing. 4.1% unemployment rate, wage growth of 3%. That's the core. Now, what could disrupt that? A lot of things, but right now that's the condition of the American consumer. They have the ability to borrow, and they're borrowing rationally. They are employed. Their wages are going up. They feel the pinch of inflation. They're trying to work that all through, and they're trying to have a good holiday season. So we'll play that. What will hurt that worse is unemployment moving up, and right now that's not projected to happen at all next year. It's supposed to go, our team has it 4.3 at year end next year. You and I have been, for most of our business careers, we'd been jumping over this, the moon if we thought unemployment was 4.3 for 2 or 3 years in a row or less.
All right, that was Brian Moynihan of the Bank of America talking about his view of the consumer, still pretty constructive there. For more on the retail picture, we're joined by Arun Sundaram. He is CFRA, Vice President of Equity Research. Arun, I know you cover from the retail side of the equation the big box retailers, and they are a great place to look at those companies to get a sense of how the consumer is doing. What are you hearing from some of the companies you cover about how this holiday shopping period is shaping up?
Yeah, hey, thanks for having me. Yeah, I think retailers in general are cautiously optimistic for this holiday season. I say cautiously optimistic because there are a few headwinds this year. There are 5 fewer days between Thanksgiving and Christmas. We had the election this past year that kind of put some noise in some of the numbers there. But consumers are spending, and retailers are ready. Inventory levels are solid for this holiday season. Deals and promotions are up, and we know consumers are seeking value and really seeking those deals. So overall, I think, yeah, like I said, the retailers are pretty cautiously optimistic for this holiday season.
So when you look at a day like today, Walmart under pressure, is that a symptom of the consumer sentiment number coming in less than expected and we're worrying about the future take rate? Or is it actually more a profit-taking kind of exercise as we close up our books?
Yeah, great question. I think it's probably a mix of both. Yeah, the weak consumer confidence number today, and also, Walmart has been one of the top stocks in retail this year, so it's probably a little bit of profit taking. In general, the consumer staples merchandise sub-industry, which includes Walmart, Costco, that sub-industry has significantly outperformed the rest of consumer staples industry. And the valuations are also up in that sub-industry, but those stocks have been significant outperformers this year. And those, some of those stocks are our top picks for next year as well. Walmart is our top pick in consumer staples, and Amazon, which is in consumer discretionary, is also one of our top picks because of their e-commerce presence.
I mean, Amazon trading near record highs, Walmart up 71% as our viewers are currently seeing. Arun, we've seen Costco, though, one of the key points drags on the NASDAQ and the benchmarks today is, again, it seems to be hit by consumer sentiment or indeed some profit taking. But Arun, therefore, what gets us there? What gets the outperformance of 2025 for the numbers and the companies you just singled out?
Yeah, so one of the reasons we're really optimistic about these retailers, these big box retailers in 2025, is really on the margin expansion story. It's not so much on sales and sales growth. We'll still probably see low to mid single digit sales growth for these big box retailers. But what investors are really optimistic about is the long-term margin expansion story for these retailers. And I say that because these retailers are really diversifying their business. They're moving past just core retail, and they're getting into newer revenue streams. For example, as these e-commerce businesses grow for companies like Walmart, Costco, Target, so does their advertising business. And advertising, as you know, is a much higher margin business than selling goods inside of a store. And that's helping expand overall margins. For companies like Walmart, they're also getting into other revenue streams like third-party fulfillment services as they grow out their third-party supplier base in their online marketplace. They're getting the healthcare, financial services. They're also doing data analytics and monetizing some of the rich data that they have. And again, these are much higher margin revenue streams for retailers. So investors really are right now looking really over the next 3 to 5 years and seeing that, hey, margins have historically been really low for retailers, but that could change going forward. And I think that's partly why the valuations for these retailers have significantly expanded over the last year.
So broadly speaking, for the big box retailers taken as a group, what's the story in terms of store openings versus store closings? How's the footprint in the United States? Because it seems like every town in the USA I pull into, boom, there's the Walmart, there's the Costco. I mean, they seem to be everywhere.
Yeah, great question. I would say it's a somewhat of a mixed picture. For the biggest retailers, Walmart, Costco, Target, they're still expanding. For example, Walmart, not only their Walmart stores are expanding, but they're also now starting to grow out their Sam's Club business, which, that Sam's Club business has been pretty stagnant for the last, I would say, like 6 or 7 years, but they're starting to expand the store count for Sam's Club. Costco is opening about 30 clubs per year, about half of it in the US and half of it internationally. Target is also expanding their store count. Where I would say there's been a bit more, I would say, closures or some consolidation is in the other discount space. So I'm talking about like Dollar General, Dollar Tree. Those retailers heavily expanded over the last 5 to 10 years. And now they're actually pulling back on that expansion story, and they're focusing a little bit more on their store remodels of their existing store base as opposed to store expansion. Yeah, both of those retailers are still expanding, but at a slower pace than what they historically have been.
How much of your Amazon pick, your call on Amazon, is about the cloud versus about the core retail story?
Yeah, I mean, one of the reasons Amazon's one of our top picks is it's another one of those margin free cash flow stories. There's, I think, still significant upside in terms of margins for Amazon. One, because their e-commerce business historically hasn't been very profitable, but that's starting to change. They're lowering delivery costs in their e-commerce business while simultaneously increasing delivery speeds, which is allowing them to gain even more market share in e-commerce. They also have a huge advertising business. Historically, advertising was tied to that e-commerce business, but now they're getting into Prime Video ads. They just started that recently with their live sports business. And like I said before, advertising is a very high margin revenue stream for Amazon. And then lastly, their AWS business. That business is now seeing growth accelerate for the last few quarters now. And it's not just driven by generative AI, but also from their legacy cloud business as more companies migrate to the cloud. So there's really a lot to like about Amazon as well. And one of the reasons it's our top pick is because we do believe over the next 3 to 5 years, we see significant margin expansion as well as free cash flow growth.
Arun, where's not to like?
Well, I think there's still some risks that we have to keep an eye on for next year. Tariffs, that's been one of the big themes on these conference calls over the last quarter. The potential for tariffs and how that could be passed on to the consumer. There is a slow softening of the labor market. The labor market's still strong, but there is a gradual softening of the labor market. And recently, the Fed has been a little bit more hawkish, so that there is some risk in 2025 in terms of further softness to the labor market. There's also an inflation risk. Some commodities are up. Wages have been a drag on many retailers' bottom line over the past few years. And now there's some uncertainty with immigration policies next year as well. So, there are some things to keep an eye on. But overall, we are, like I said, we are overall net positive.
Look, there's some idiosyncratic news as well that we keep our eye on. And I know it's not a stock that you cover. We were talking earlier about Nordstrom family, sort of basically taking their company private once again with the help of a key Mexican retailer as well. Where are we seeing the opportunities to restructure, to rethink, to even see a bit of M&A? I mean, the Albertson Kroger deal did not work out, but is there going to be that under a next administration for 2025?
Yes, certainly. Yeah. So for 2025, there seems to be we're entering a more favorable regulatory environment under this new administration. I think that's the consensus out there. I think we could see more consolidation within the retail space. Yeah, I know the Albertsons Kroger merger didn't go through, but generally speaking, retailers are their financial positions are relatively strong. Balance sheets are strong. Debt is relatively low. I think we could see some consolidation in the retail space, especially in the grocery space. Like I said, I know the Kroger-Albertsons merger didn't go through, but outside of the top, the 4 or 5 largest grocers, there's a huge tail of smaller grocery companies out there in the United States. A lot of regional, independent grocers out there, and a lot of them have been losing market share to companies like Walmart, Amazon, even Kroger. So I do believe that there's M&A opportunities, and I think companies would be more receptive or more willing to take on M&A because of the favorable regulatory backdrop and generally stronger balance sheets.
All right, Arun, thanks so much for joining us. Really appreciate it. Arun Sundaram, CFRA, Vice President of Equity Research, talking about some of the big box retailers here. I'm looking at Walmart, the DES screen, Caroline, 2.1 million employees. Wow. And I'm guessing, most of those are not in the corporate HQ in Bentonville. I'm guessing they're out in the stores and the fulfillment centers. Man, they employ a lot of people. I wonder what a company like that, their policy is on immigration and things like that, because I'm guessing a bunch of those folks, I guess they depend upon it to some degree. So I'll have to see how that plays out. That's what you hear from a lot of businesses saying, hey, this might be an issue if I can't get ready access to these employees. We'll have to see how that plays out, I guess.
Yeah, and just think about the real estate industry as well. We're looking at those new home sales coming in less than expected and people wanting to build, and that's going to be a key concern going forward. We've got a lot to debate also about, where the next administration is bringing investment in, and it's in AI, it's in technology, and it's coming from Japan, from Masayoshi Son. There is a great Bloomberg Beat Take coming up that we wanted to be debating inside Masayoshi Son's next quest to be the next NVIDIA. This is Bloomberg.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control 1/3 of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything. The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Good Monday morning from New York City. I am Paul Sweeney alongside Caroline Hyde, who is reporting from London. This is a special edition of Bloomberg Markets, where we're simulcasting both on Bloomberg Television and radio. Looking at the markets here, quiet holiday week as you would expect. We got stock market volumes traded today about 20% below normal levels. Not real big movement on the indexes either. S&P 500 up 12 points. That's about 0.2%. The NASDAQ up a little bit better, up about 120 points at 0.6%. The Dow's off 120 points, so a little bit of red and green there. On the yield space, a little bit of a lift to yields here. We've got the 10-year Treasury yield up about 4 basis points. Let's call it 4.56%. In commodity space, we like to take a quick look at WTI crude oil. It's off about 1.2%. We're down about just below $69 per barrel there, so we keep an eye on that. And Bitcoin off 1.7%, $93,000 per token. So we got a little bit of movement there in Bitcoin as well. China's self-driving firm Pony AI is looking beyond the U.S. to avoid tension. CEO James Peng spoke with Bloomberg about the growth of his company and the impact of U.S. sanctions against chip makers in China. Let's take a listen.
In terms of the sanctions on the chips, actually for us, it's nothing new. We have dealt with this for quite some time already. So for our strategy was and remains to be that we will diversify our supply chain. And I think as the more and more manufacturings of the chips coming out from either in China or rest of the world, we'll try to have more diversified supply chain to further de-risk our exposure to the geopolitical tensions.
Hi, James. This is Steve Engel here. We met, I believe, at the Beijing Auto Show earlier this year. And I did take a ride in one of your LiDAR and Pony AI-equipped Toyota robocabs in Beijing. I do understand that, you're a company that had some robo trials in the Bay Area, but also in multiple cities in China. So you kind of have, influence in both the United States and China, obviously. But what was the main questions as you took your company public in New York? What was the main concerns, if you will, of potential investors when you went on that roadshow in the United States with increased geopolitical tensions?
Surprising, actually, the geopolitical tension questions wasn't at the front and center of the investors, but rather the investors more focused on the economical side of the robotaxi. People are really interested in figuring out when will be a time for the robotaxi to be actually large-scaled, deployed, and be profitable. So I think the good news is that people really believing that 0 to 1 has already finished, and now it's the time for the autonomous driving companies to really go to the large-scale commercialization.
What does that look like exactly, James? Because right now you're operational in 4 of the top or tier 1 cities, but what does that actually look like, say, over the coming 1 to 2 years? I know that you're going to continue to focus your efforts primarily in China, but talk to us about the competitive pressures that you face there as well.
Yes, especially if you're talking about the next 2 years, our main focus will be on the tier 1 cities of China. And actually, just this year, we also signed a deal with Beijing Auto and Guangzhou Auto to mass produce autonomous driving vehicles. So that means in the next 2 years, we'll have at least 3 models coming out of the assembly line will be launched into the tier 1 cities in China. So I think with the support of further support of the regulations and the residents actually get more familiar with our services, I think we'll have a much larger fleet, have a bigger coverage, and hopefully we'll be able to actually have a much larger scale commercialization.
James Peng, Pony AI there. And of course, if we're going to talk AI, we've just got to delve in to the latest $100 billion bet coming from none other than Masayoshi Son. It was made last week, of course, that surprise visit he made to Mar-a-Lago with President-elect Trump to announce that he would indeed be taking another massive bet on AI here in the United States, this time $100 billion. In fact, maybe we'll double that. That's certainly what President Trump was asking him to do. Let's delve into that story with Mark Bergen, who joins us in the big take. This is setting into the context. $100 billion bet from Masa is actually probably just a small part of really what he's already orchestrating. We knew back earlier in the year, in February, that he was looking at doing $100 billion in chips. Where is he looking to take ground?
Yeah, certainly. I mean, we've seen kind of absurdly large numbers being thrown around, even in the trillions. There's the great big take reporting from my colleagues today really lay out the inside of his ambitious plan, which is to be the next kingmaker in chips, right? It is to be not just to replace NVIDIA, but to, I think, kind of skate where he sees the puck going. He's looking at ARM as SoftBank's largest holding. It is primarily now a chip design maker for mobile phones. He's looking at potentially for the AI coming into our homes, into our offices, into cars, that sort of edge computing. This is an opportunity that, the numbers are, the estimates can be as large as Masa Son makes them want to be. And then he obviously has the capacity to borrow a lot of debt and spend a lot of money.
This is a little bit of a makeup story for Masa Son, because the last time he flashed a lot of money around with his Vision Fund, a lot of those deals did not work out well at all. What's happened to Masa Son over the last several years as he gets back onto the stage here?
Correct. I mean, we had some great reporting and about that Vision Fund. I think that the write-offs were massive in 2022. Some pretty notable failures. WeWork, the most famous one. I think, he's actually, my colleagues reported in the story today that he stopped attending some of the meetings, that he was sort of famous for coming in and writing these checks with a very brief conversations with startup CEOs. A lot of the attention at the fund, it seems, has shifted from cutting these large checks into industries across the gamut and startups, and now focusing kind of exclusively around AI and chips and robotics. And I think that's sort of where he's at least attaching hoping his legacy will be.
And probably many working over at SoftBank would say, look, I think the redemption story is clear when you look at our bet on ARM and how well the IPO went, how much value that has created for the company. They've also bought a Bristol-based, UK-based company, Graphcore. Just where in the ecosystem of AI are they playing? Is it the energy side? Is it the application side? Is it ultimately still the picks and shovels of chips?
So we have some interesting reporting that he's talking a lot about energy and energy capacity, and in some conversations with Sam Altman, who's addressed that sort of shortage and perceived shortage coming up. Graphcore here in the UK is similar to ARM and sort of just in NVIDIA, just doing designer, right? They're not actually doing the manufacturing. They had this sort of innovative design. They didn't have much sales traction at all, but they are, from our reporting, sort of central to whatever this next vision of these AI chips set to come out as soon as 2026. So I think less on the sort of application side, but more of what ARM's doing, but just more of that kind of in more devices, in more spaces, and kind of wherever you can imagine AI being.
Yeah, I mean, he already is, I think, I always kind of consider him a pretty big player in AI because of that. I guess they have a 90% investment in ARM Holdings, and those folks designed some pretty cutting-edge chips. Is that the basis from which he's going to try to compete?
Well, SoftBank also has a pretty big stake in OpenAI, right? And I think we've reported that Masa Son actually wanted to invest earlier. He wanted to invest more, which is not surprising. So he's talked a lot with Sam Altman. There's likely that there's been some reporting around a potential phone venture they've been doing with Johnny Ive. So I don't think ARM is the be-all, end-all, but it's certainly central to his new strategy.
I tell you what, $100 billion gets your attention. So if that's what he was looking for, standing alongside the president like Trump and talking about those types of numbers will get it done for you. Appreciate it. So some great stuff. Mark Bergen joining us there, Bloomberg News. Again, on the big take story about Masahiro Son, looking to make a big investment in the U.S. market on the technology front, $100 billion over 4 years. President Trump then, I think, half-jokingly said, hey, why don't you double that to $200 billion. So we'll have to see how that goes coming up. So coming up, we're going to be checking in with a very smart guest. He's going to be joining us, Jay Hatfield, one of the smarter folks we talked to. He's the CEO of Infrastructure Capital Management. He'll give us his thoughts on these markets. A little bit of mix on the screen here. S&P 500 up 16, the Dow down 90, and the NASDAQ up 120 points. That does it for Caroline Hyde and myself. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
A continent of vast opportunity and endless potential, but not without its challenges. Bloomberg highlights the players and unpacks the issues shaping the African story. We'll bring you interviews with key newsmakers and expert analysis, getting to the heart of business, politics, and economics in the region. I'm Jennifer Zabasaja, and this is Africa Amplified.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot?
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice and my conversation, my poetry, you know.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg Television and Radio. I'm Shonali Bassick. I'm standing by here with Katie Greifeld, and we're taking it home for the last full week of the year.
You know, usually by 12 p.m., we're both on our way out the door. So this is a nice holiday treat. Of course, it is the 23rd of December, 2 short days until Christmas. You take a look at these markets in the holiday mood right now. The S&P 500 up about 0.4%. Volume is nowhere to be found, but let's not focus on that. Of course, we're coming off of 2 straight weeks of losses for the S&P 500. A little bit of green on the screen, led by big tech. The NASDAQ 100, Shonali, up about 0.7%. Nice to see after what's been a pretty volatile couple of weeks in these markets.
Yeah, it's a pretty amazing trade you're seeing set up today just to kind of close out the year because, of course, we were flirting with that 6,000 level for the S&P 500 for so long, and now we're still hanging out. A lot of analysts that would be way ahead of that. We are not. Indeed, we are not. But, you know, the things leading us into this week, AI trades, chip makers, those are the gainers. It's the consumer-driven stocks that are really the laggards here. And it's interesting to see that because that was the trade that started to build throughout the year. It got let go a little bit. Let's see if it comes back in 2025.
There were a lot of surefire trades that broke a lot of hearts this year, including at the benchmark level. Let's get into it with Alexandra Semenova. She joins us now. She's an equity reporter for Bloomberg News. She tracks so carefully, of course, all of the year-ahead analyst targets and bring us back to end of 2023 and what the expectation for the S&P 500 was, because it's a lot different from where we are right now.
Yeah, so I have to start out by pointing out that obviously we've been losing some momentum the last couple of weeks, but it has been 2 consecutive banner years for the S&P 500 index, returns of more than 20% for 2 back-to-back years for only the 4th time this century. A really incredible run that truly no one could have anticipated. And to see that, you know, you go into 2024, strategists were estimating an average target of 4,867 on the S&P 500. We, of course, handily surpassed 6,000 before this pullback that we got last week. And it was actually the least bullish outlook since we began tracking these targets in 1999. And now the benchmark is actually on track to post the biggest gap between strategist consensus going into the year and where it actually ends. So really incredible here. No one could have anticipated this AI momentum would continue. Everyone thought that the Fed's interest rates would thwart the economy into a recession, and that just didn't materialize.
You know, speaking of things that didn't materialize, what is fascinating still, as you've been talking about, a banner year. The S&P 500 up more than 20% right now, up about 24%. 2 years in a row, we're seeing it up more than 20%. That is the best run since the 90s at least. And so with that said, why do analysts believe that there's so much upside going into next year? And is it good enough? If you're not getting those gangbuster 20% returns, why not look at fixed income markets or elsewhere if you only think you're going to get 10%, which sounds good, but not if you think you're going to get better elsewhere.
Yeah, so what's really interesting here, an important part of the predictions going into next year, is that Wall Street is coming off of wrong way calls for 2 straight years in a row. Remember, in 2022, everyone was kind of predicting a gain, and instead we got this incredible rout that no one really saw coming. I think the only person who called it was Morgan Stanley's Mike Wilson, who of course made a name for himself with that call. And then last year, everyone thought that we would get a recession, that borrowing costs would weigh on companies, and instead we had gains of more than 20%. This is actually 3 years now of wrong calls, and of course this year no one could have really anticipated that we would get double-digit returns again. So going into next year, we're at a bit of a crossroads where strategists don't want to go against this bull run that has continuously burned them, because this year they spent much of the time, instead of front-running the rally, chasing it. Goldman Sachs revised its year-end target 4 times, UBS doing the same thing. That is truly an unprecedented unprecedented frequency of upward revisions to their forecasts. And so going to next year, all the targets actually fall around the 6,600 line. That's a gain of roughly 10% from where we currently are. And it shows that they're walking a well-trodden path here. First and foremost, that is consistent with annualized returns on the S&P 500. And that's also where kind of strategists have always been.
Well, that's what I find kind of funny here, because, I mean, you could look at the 6,600 level that it seems like Wall Street is coalescing around and be like, okay, they learned their lesson, not to be super bearish here, but they're just batting for average here. That's all they're predicting, is that,
safe
yeah,
after
exactly.
being terribly, terribly burned. And now, at this point, you know, the fundamentals are still good. We're expecting earnings growth next year. The Fed, depending, you know, I guess we don't know much about what the pace will look like, but the Fed is still on track to keep easing monetary policy. The economy is still doing well, so they have no real reason to go against it. But we are actually at this pivotal moment. We're kind of at a crossroads where valuations are incredibly stretched. We have no idea what the next administration will do in terms of policy, which could weigh on the rally.
Is there anyone who is standing outside the pack here, either to the upside or the downside, saying, you know, I am standing outside of consensus?
At this point, no, which is kind of worrisome. You take a look at JP Morgan, which for 2 straight years has held on to its target of 4,200, not budging on that. Now they're predicting a gain. Theirs is 6,500 now. And I had a conversation last week with Dubravko Lagos-Bujas, who is the chief market strategist now, and he was kind of saying that he actually thinks that the risks are to the upside, that the economy is so strong that, you know, the AI rally will continue, which could be a concern, because if you look at it from a contrarian perspective, when you have someone who has been bearish for 2 years in a row now suddenly turning bullish, that's something to be wary of.
Well, they did lose Marco.
They did lose Marco.
Yeah, new era over here. The other place I want to look that I find fascinating, you wrote about how retail traders really lagged the pack here. In fact, so badly that their returns are the worst in nearly a decade, you've written, which is shocking given the run we've seen in the S&P 500. What happened?
Yeah, it's pretty incredible when you think about it. So retail traders were up only about 9.8% as of last week. This is according to data from JP Morgan, and of course pretty astounding when the S&P right now is up 25%. And by comparison, if you look at some of the other years that the S&P has been up since this much, 2019, 2023, 2021, retail traders posted returns of similar magnitude. So what happened this year, I've been asking a lot of my sources, is one, a lot of people were probably too allocated to bonds and missed out on the rally in equities. Everyone was kind of uncertain about the outlook going into the year. And then also that they weren't participating as much in the Magnificent Seven and perhaps playing on other names. So that could be some of the explanation behind
That's
this.
interesting. I think that would surprise a lot of people because, I don't know, the muscle memory is to think retail trader, okay, they're going in on this sort of YOLO momentum, but you're talking about mom and pop here, it sounds like, if we're talking about being too allocated to bonds.
Yeah, exactly. You know, when people think retail traders, they think the Reddit army, the people who are allocating to the high flyers, but it's not necessarily those people. You think retail broadly are just regular everyday investors who, you know, have a strategic portfolio allocation and think long term. And there was still too much allocation to fixed income and kind of missing out on some of the gains. And of course, people still heavily allocated to cash money market funds, still sitting at $6 trillion.
Well, what role did Bitcoin play in all of this as well?
Yeah, so Bitcoin obviously had a momentous year. Some of the retail army on the Reddit side was allocating to those names. You know, even taking a look today at Rumble after that announcement, it was up something like 95%.
First of all, what is Rumble?
So it is a video platform, and it received an investment today from Tether, and of course, people are piling to that, which is just a testament to, again, people being very enamored by these high-flying names, even as market breadth underneath the surface deteriorates.
Chanel, I have to say, I need to read more about that because Tether, of course, it's a stable coin. So I didn't realize that they would be in the investment business to that degree.
Well, it's going to get more interesting, too, with their relationship with Cantor Fitzgerald and how they're expanding. I think 2025 is going to bring a new narrative for even the most stable of crypto assets. Alex, we thank you so very much. We're going to see you later in the show. That is Alex Semenova, of course, of Bloomberg News, following all things in the strategy world of equities. We now are also going to bring in Jay Hatfield. He is the CEO and portfolio manager of Infrastructure Capital Advisors. Great day to have you to close out the year. We've talked all year about the direction of inflation, but I also want to talk about it now as it pertains to consumer confidence, because you're seeing from the report this morning from the Conference Board that the confidence from the consumer is not just being impacted by inflation anymore, it's much more severely being impacted by politics. What role is that going to play next year?
Well, happy holidays. Thanks for having me in. Well, we actually have a unique view on consumer confidence, which is not very constructive, but we don't think it's that important, really. Like, if you ask the average consumer, they don't even know who the vice president is. So I don't think it's really going to affect their spending. I think, as you pointed out, people are uncertain. A lot of people aren't happy about the new president. And so that's probably weighing in there, but I don't think it's going to affect us economically.
Well, let's bring this conversation to the markets because it feels like if you take a look at survey-based measures of confidence and sentiment, it's been in the gutter for on and off for the past 2, 3, 4 years, of course, heavily impacted by the pandemic. And during that time, of course, we've seen this incredible bull run for the market. We were just discussing with Alex Semenova how now Wall Street coalescing around 600 or 600 for next year. What is your feeling heading into 2025 when you think about 2 years straight of 20% plus gains?
Well, we remain optimistic, but we are concerned about the current state of the market. We think investors are way too optimistic about economic growth and way too pessimistic about inflation. And you're seeing this constant move up in the Treasury, which is not good for the market. It weakened the market up this morning. The tech stocks are saving the market. But our 7,000 target is at risk if we don't get at least stability in rates, or probably even dropping down somewhere near 4%. Because you can't really justify a 23 multiple with a 5% Treasury.
Interesting. So if you think about the long end of the yield curve, of course, above 4% and then some, you think that investors are too optimistic about growth. It sounds like you're building a bullish case for long end duration then.
Absolutely, although we're not saying catch the knife today, but there could be a rebalancing. But the data to watch, as always, is the critical data, is the housing sector. So a little bit of weakness. But at today's Treasury, the 30-year mortgage is above 7. That's really negative for housing. And keep in mind, housing is what causes recessions. 11 out of 12 post-World War II recessions came from the housing sector. I don't think we're going to have a recession. We could have a big gross slowdown, which is not in the market whatsoever. And I would watch housing. I would watch housing starts as the stat that we look. There's been a crash below 1.1 million in all of those 11 recessions on the housing start side.
So what does that mean in terms of what you expect next year? Do you think that the Fed would be able to cut successfully in a succession, or do you think that there's some upside risk to rates here still?
Well, we think they should cut 4, and the data will support that. But the data to look for, again, that's why I said I don't want to catch the falling knife, is PCE. We already got one good data point on Friday, but if you look at the pattern, it's easy to look this up on the terminal, you'll see we're rolling off of 0.5 and then some other high PCE data, and shelter has gone down to 0.2. So that's likely to continue because 18 months delayed, so it's not going to blip up probably. And so we, like a few other forecasters, are saying we're going to roll down to 2.3 after the first quarter. So that's the critical data. If we don't get that, then we're probably going to be wrong about rates, and we're going to be wrong about rotating into the value sector, because it's going to be like today's market where everybody just buys techs and fades the rest of the market.
We have less than a minute here, but I do want to kind of double down real quickly on what you said about the housing world right now, because how much does it matter? How much is there a spillover effect if you have mortgages hanging out still above 7%?
We think it's super negative. If you look at Lennar's earnings, everybody kind of ignored it. They missed earnings. And this rate rise has been quite rapid, so we're not even seeing it yet in the data. So we're very concerned about housing. And so I would just summarize that the best cure for higher rates is higher rates. So these rates are going to choke off a lot of that housing market. And that's why we think people are too optimistic about growth.
All right, Jay, unfortunately, not enough time. Have to leave it there. Really appreciate you coming into studio. Happy holidays when you get there. That is Jay Hadfield of Infrastructure Capital Advisors. Now, coming up, we're going to take a look at the future of tech antitrust law under the new administration. That's next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg right here on Bloomberg. Context changes everything.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture. It's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to our Bloomberg television and radio audiences. This is Bloomberg Markets. You have Shonali Bassick and Katie Greifeld today. And we are watching the moves that's happening in big tech, of course, because under the Biden administration, the world's biggest tech companies have been fighting regulatory battles, including on the antitrust front, on privacy, national security, and on competition. And now, can major tech firms expect anything different when it comes to President-elect Trump's policies and the incoming Trump administration? We're going to discuss it all with Leah Nyland of Bloomberg News, covers antitrust for us. Now, Leah, when you think about the changes ahead, there is some of this tone that will be tough on big tech. Where will it exist and where won't it?
Yeah, I mean, so the Trump folks are definitely going to keep up the pressure on antitrust for the big tech companies. Gail Slater, who is the nominee to head up the Justice Department, has long been a Google critic, and she has worked for a number of Google critics. So people expect her to sort of keep up the pressure on Google and continue with the path that the Biden administration has been taking to look at a breakup for the company. And then over at the FTC, Andrew Ferguson is Trump's nominee. He is currently a commissioner and has also taken a pretty hard line on the tech companies. In a bunch of cases recently, he's written about how we need to look at them more, particularly on the issue of censorship of conservatives online, and how they have sort of too much power over freedom of speech.
This is interesting because, I mean, especially after Trump was elected in November, it seemed like it was going to be a free-for-all, that you were going to get any deal done. Of course, this deregulation, especially when it comes to the financials, was quite enthusiastic. But what has Donald Trump himself said when it comes to big tech regulation?
He hasn't said a lot, except that, you know, he thinks that we do need antitrust in the, in the tech area. You know, when Bloomberg did the interview with him before the election, we did ask him a question about the Google breakup, and he said he's not sure that Google needs to be broken up, but that the government needs to do something here. So he's been pretty, strong on that point, in his first term and in the years since.
What does this mean for the range of outcomes for Google in particular? Because they are kind of first in the line of fire here.
Yeah. So the big case, the Google search case, is going to go to a second trial over what the remedy is in the spring. And the judge in that case has given the Trump administration an opportunity to potentially tweak that a little bit. So the Justice Department has already proposed that they be required to sell off Chrome. It has a bunch of proposals that they have to share the data and that they have limits on AI. And the Trump team is probably going to keep up with that, if not make make suggestions for a tougher remedy. The judge did give them an opportunity in March to sort of offer their views if they want to take a slightly different tack from the Biden administration. But we're looking at, finding out if there's potentially going to be a Google breakup, in the first half of next year.
And talk to us, too, about sort of the CEO lobbying efforts that you're seeing on the part of these big tech companies, of course, giving money to, Trump's causes, but also actually going to Mar-a-Lago.
Yeah, we've already seen a number of them take the trip down there. Mark Zuckerberg has, and he gave a bunch of money to Donald Trump's inauguration fund. Tim Cook went down there and had a dinner with Trump, and then Trump said that he's going to sort of exempt Apple from a lot of the tariffs that he's looking to impose on China. So there's already been a big lobbying effort by a bunch of the big tech CEOs to sort of push the administration in the direction they want. Now, whether, Google is successful in doing that, or whether, Mark Zuckerberg's donation actually ends up doing anything to the cases that are pending, we don't really know. I mean, Facebook is set to go to trial again in April over the FTC's case that is looking to break up the company and making them sell off Instagram and WhatsApp. So, they're still heading towards a trial and could also end up with a breakup next year.
All right, Leah, great reporting as always. Appreciate the time today. That is Bloomberg's Leah Nyland. And let's keep the conversation going now with Adam Epstein. He is the co-CEO of Ad Marketplace. It's a search advertising company providing media solutions for advertisers and publishers. And he has been advising the DOJ's antitrust team on their case against Google. Adam, it's great to have you in studio with us. So we heard from Alphabet on Friday. Of course, they called the Chrome sale, that possibility, as an extreme remedy that's at odds with the actual law. And they also said in that court filing on Friday their own remedy, which would be allowing competing browsers to make deals with search engines and device makers to basically preload multiple search engines. I would just love to hear your reaction to that to start up. Does that go far enough in your view?
Yeah, I mean, it's an opening offer, and it's basically saying, look, we're going to stop forcing our competing browsers and device makers to have default exclusive deals for their search engine result page. It's not going to, on its own, create competition or unlock innovation that I think the court is looking for in the two search markets that it found Google to be a monopoly in.
So it doesn't necessarily address the root cause then? It doesn't create more innovation?
Correct. It's a step, which is Google saying, look, we understand that our agreements with our partners are, onerous and are, anti-competitive. It's, the DOJ and the government have come up with more steps, which would really allow for the licensing to have a search experience for users where Google results would show up next to a ChatGPT, next to a OpenAI. And that's really I think the future of search is going to be, the next generation experience is going to be Google commingled with other search results, especially from Gen AI, not something that's just completely controlled by Google.
Well, that was what I was wondering about. Say that you don't see a split up. Say that, nothing really comes of all this. Then you look 5-10 years into the future. What does search look like? You already have an experience where you type in a query,
right,
and you are given a whole host of options that you would not have gotten 5 years ago or a year ago, let alone. So what does that look like, and who is feeding you the information at the end of the day?
Yeah, that's the question, and it's a great question. I think that the idea that we're all going to go to the same legacy search engine result page, it's kind of one size fits all for all of us, that's going to seem quaint in about 24 to 36 months. The idea that even today we're all going to maybe a Gen AI search provider and then checking on Google to do a compare and contrast, there's no reason that an Apple or a DuckDuckGo couldn't provide that kind of integrated experience on their own site, except for the fact that they're prohibited by Google currently under these licensing agreements. So that's really where, these are behavioral remedies. They're not quite as sexy as the divestiture, but from a consumer perspective and from, the $50 billion in monopoly tax that Google is extracting from advertisers, having competition, having innovation on these search result pages that are curated by the actual providers instead of by the Google itself, I think that's the future.
Is there a scenario here, and this is, the capitalist way to go about it, that the market fixes itself, given all the competition that is coming up with Gen generative AI.
Right, exactly. So Google's licensing agreements right now do not allow the market to fix itself. They have these default exclusive agreements where they're force funneling every user to their own search result page. And I think the judge is absolutely looking at ways for the market to fix itself so that advertisers can have transparency, users can have choice, and really the browsers themselves and the device makers themselves can have a lot more control over curating that experience and having different providers competing for who has the best result.
Let's go down the path of
competing for who has the best result.
Let's go down the path of the hypothetical, and let's say that actually Chrome was sold.
Right.
Who would be a potential buyer there? What could that potentially even look like?
Yeah, that's really what's difficult about this is, it's a great headline. It makes a lot of sense. I think especially if Google is not going to comply with the behavioral remedies we were just speaking about, that having a different manager or a different ownership for Chrome would be a great way to make sure that they're incented to comply with those. But, once you're in a world where, Chrome is being sold, controlling the sale and what that owner is going to do, I think creates a lot of unknowns on its own. So I'm not sure it's, again, these are all both initial offers. So Google coming out kind of with a very small change, DOJ coming out with a huge change. It might be that we meet in the middle, not too hot, not too cold.
The trial is right around the corner. We only have less than a minute here, but what comes next, and what is your advice here when it comes to the Justice Department's next moves?
Yeah, so, what comes next is we're going to have in March another shot to see what the proposed orders are. There's going to be a trial in April where we're going to talk all through all these issues. And, I think that the DOJ and the government have really been very thoughtful. They've been talking to industry. They want to know what the right solution is. Again, there's this huge monopoly tax being extracted, and if they can fix this industry and allow the markets to self-correct, as you say, that'd be a huge win for everybody.
Adam, we thank you for joining us here on set. Happy holidays to you. That is Adam Epstein. He is Ad Marketplace co-CEO, and he has been working with the Department of Justice to advise on this big case ahead. A lot going on in the world of tech today, and certainly a lot going on in the markets. We'll bring that all to you next. This is Bloomberg.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
chip are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Bloomberg Markets on TV and on radio for our holiday special coverage. I'm Katie Greifeld along with Sonali Basak. Let's take a look at these holiday markets. Not much volume to speak of, Sonali, but we do have green on the screen. You take a look at the S&P 500 net right now, up about 0.3%. Big tech is in charge with the NASDAQ 100 up about 0.6%. Some of your biggest movers there, Broadcom up about 4.7%. We'll get into that in a minute. But I did want to take a look at the bond market right now because that 10-year yield is now knocking on the door of 4.6%. We are higher by 5 basis points today. We are well within that danger zone we've been talking about on open interest.
Well, wonder if you need a new danger zone, the 5% level, really on high alert into next year. And it's interesting because those yields, you're seeing pressure on parts of the market that did get a bid. We were talking about consumer stocks being so loved the last couple of months. You're seeing that reversal. I am really interested because among the most beloved consumer-focused stocks were those cruise lines. And today is the worst performer of the day is Carnival, which was up more than 6% on Friday, down more than 4% today. Norwegian, not far behind, down more than 3%. These are companies that are telling you that things have been good, yet you are seeing the market saying, okay, well, there has been a bit of a run-up here. Let's get a little bit more discerning about how we treat the consumer. Darden Restaurants, another company down more than 3% today. Just interesting to see that consumer trade getting hit.
Yeah, absolutely. Also the small caps. You think about where higher rates hurt. It's the little companies, and as such, you have the Russell 2000 down about 0.3% today. But let's get specific here and let's look under the hood because sitting in studio with us is Emily Griffeo. She covers markets for Bloomberg News. What's going on underneath the surface?
So, like you guys had mentioned, it's a lot of tech today that's outperforming, and specifically in the chip space, not just Broadcom, but its equally named cousin, Qualcomm. Whoa. A chip maker. This is on some actually company-specific news. They had a positive trial verdict against ARM on Friday. ARM had claimed the company had breached a license for chip technology. Qualcomm prevailed in that trial. So the shares have been up as much as 3.4%, biggest jump since November. All around the street is saying that the verdict is positive. Bloomberg Intelligence said that this verdict gives Qualcomm space to basically keep offering their CPUs based on the technology that they had. There's no near threat of disruption from ARM. We're seeing shares of ARM lower, but also just more broadly in the chip space. We mentioned Broadcom, but NVIDIA is higher, AMD is also higher, and then the Philadelphia Stock Exchange Semiconductor Index is up about 2%, the SOX index.
Right, it's interesting to see that kind of love kind of at the end of the year, that year-end bid in the names really that we've continuously seen loved all year. Broadcom is also the biggest gainer in the S&P 500. AMD is right behind it. What else do we know about some of the love being seen behind that kind of AI trade into year-end?
So we're seeing Meta higher as well. Rosenblatt Securities named Meta and AMD top picks for the first half of 2025, which is funny because this is not like a new trade. Their analyst said that Meta is in the midst of an impressive and durable AI-driven growth renaissance as it's driving up daily usage on Facebook and Instagram, bolstering traction for Reels, improving ad efficiency. With this level of revenue growth, Meta has room to absorb more investment. So I don't think any analyst out there on the street is looking to come up with a new investment theme right now. We're pretty much talking about what we've been talking about all year AI revenue and whether those big tech companies can actually prove in the new year that they're seeing returns on their investment.
As our producer Jackie Lopez says, big tech, not to be confused with little tech, but also Meta. The other reason that trade is interesting is it's already up, Katie, 70% this year.
Well, think about what happened in 2023, up 194%. I mean, Mark Zuckerberg has just been on fire, and at least some on the sell side think that his hot hand will continue. Let's talk about Nordstrom's, though. This is an interesting story. Of course, the Nordstrom family did take the chain private. The stock move, maybe the actual story is a little bit more interesting than the stock move, but nevertheless, what's going on?
So this is a company that peaked pre-pandemic and never really seemed to bounce back from their pre-pandemic highs. Their annual revenue peaked at $15.9 billion in 2019, and since then, the stock over the last 5 years down 40%. It was actually outperforming the S&P 500 year to date, but I think that the shareholders and the Nordstrom family is looking at a longer-term view of this company and now deciding that it's not worth it to be public. And also, a lot of these department store chains have kind of been reinventing themselves this year due to the growing competition of Amazon and other online retailers. So Nordstrom, the news today that they're going private, an all-cash transaction. But earlier, we also saw Macy's closing a bunch of stores. And then earlier in the year, Saks Fifth Avenue bought Neiman Marcus. So it's not too surprising to see that this department store needs to be, I guess, reinventing itself.
Also for fun, I got made fun of my entire life for not being able to say it in singular. You have the same bug.
Is it actually just Nordstrom?
Yes.
Okay, yeah.
Wait, did I say Nordstrom's?
No, I definitely said Nordstrom's.
But I cannot say it singular either. It just can't come out of my mouth that way.
I'm looking at the headline now and I see that it's singular and my mind just refuses to process that.
But you know, the deal-making spree here, this rumor has been going around for a while now. And so to see the numbers come to fruition are interesting. You could see that the market may have wanted a little bit more for their money. You are seeing the stock down on the day.
It's interesting, though, like just as a sign of the times. Remember, in 2018, the board rejected the family's bid to take the company private at $50 per share. They said that was too low. You fast forward to today, and Nordstrom common shareholders will receive $24.25 in cash. So, boy, it has been a rocky road here.
And that's a little bit, actually the stock is now trading a little bit lower than that level at 24.12 right now.
The other fun little fact around this, you initially did see the bond prices also drop on the take private offer. So that means into 2025, this is a deal story that we will be watching, guys. Well, anyways, Emily, we thank you so much for joining us here on set on a story that we love. That is Emily Grafeo. And joining us now, we're going to go broader. We're going to bring in Michael Giacone. He's the co-founder and CEO of Button, a commerce optimization company. Great time to talk to you about retail, isn't it? When you think about the year end and what's possible and how it may filter into 2025, is the optimism and the resilience you saw among consumers going to hold up?
Yeah, you know, I think it is, and thank you both for having me today. I've seen the trends in our data across the Button platform continue to grow. If the optimism we're seeing, you see the November retail report showing uptick of 0.7%. It's bellied by the increases that we're seeing in e-commerce spending, with online sales being up 8.2% year over year. Mobile really leading that charge with a 10.5% year over year increase. And so I think, you know, the optimism is felt by the consumer today. It's being represented by their wallets and what they're backing up with their holiday purchases.
Now, what does this mean in terms of how they're spending as well? One thing I think about a lot is one of our financial correspondents here at Bloomberg News is the consumer has a lot of credit card debt on their balance sheets right now. In fact, you're looking at record levels of credit card debt across the United States. Are people just maxing out to get through the holiday season?
You know, I think there is. You're seeing a sensitivity towards deals throughout this holiday. So the holiday set records, and one of the records, you know, was driven through the holiday orientation towards deals. You're seeing a new deal by retailers announced. I think that, you know, Amazon had 30 days of deals, you know, going into the holiday. You're seeing another winter holiday deal start today with them. So we're realizing that the consumer is deal sensitive and pricing sensitive, but they're still willing to spend, and we haven't seen that slow down down. In fact, it's been increasing period over period, even post-election, to see a bump for the button platform, which drove nearly $2 billion in commerce in November, a 90% increase in shopping trips from the period prior to November, October, and seeing that lift year over year comparables are totally different. So we think that this is poised for a 2025 that's going to really shatter the records that we've seen, broken every year because of this increased optimism, even though that credit card debt is continuing to increase.
And I do want to talk a little bit about how politics and the potential for tariffs wrap into the retail conversation, because we got U.S. consumer confidence figures out from the Conference Board this morning. And beside the headline number, it was interesting to see that consumers are increasingly worried about tariffs. You had 46% expect them to raise the cost of living, 21% expect them to create more U.S. jobs. So there's a lot of cross currents there. But when it just comes to consumer confidence and actual retail spend, what do you see? What do you anticipate?
I think it's a really interesting dynamic that's going to affect what the biggest online retailers are doing today, which is majority of the products that you and I are looking at or buying when we're looking at the various marketplaces, from Amazon to Walmart to Target, is a lot of these products are actually sourced in foreign markets. And so if you're buying from a marketplace seller that is based in China or in a foreign market, you're going to see these tariffs have a big impact and affect the consumer. So I think there is reason to be concerned. I think this could have a shockwave through the economy if they're too high, and I think that the marketplace sellers, the real lifeblood of the internet economy, face this. They're going to have to adjust their business tactics, and you may see that trickle into impacts on retail media, one of the fastest growing forms of advertising online, because these are largely fueled by a lot of these foreign sellers.
Well, speaking of online advertising, I want you to unpack this line in your notes, that you're seeing the creator economy play a big role in driving sales for retailers. I'm thinking influencers, but what does that actually mean?
Yep. Yeah, it's a great question. So I think, a lot of people have seen the creator as somebody taking a photo of themselves and, posting it on Instagram. And what you're really seeing emerge is this shift in media. If people used to look at how they would buy product and be influenced to go buy product through looking at Vogue or looking at the New York Times, I think you're seeing an emergence of a new form of media in the individual, the creator who's creating content, not just a photo of themselves, but recommendations on what to buy, where to look, where to travel. And you're seeing an emergence in real driving economic value that you never saw before, partly because technology hadn't caught up to really enable the ability to see what those creators were actually driving in value. And also because I think that the user behavior patterns are changing. The creator economy, in what we are seeing year over year, has driven over 300% increase in buttons total traffic, describe, I'd say, more explosive growth than anything we've seen on our platform historically. And it's fueled by the disintermediation of what consumers are doing to collect or create or identify with their content. And so I think you're going to see that emerge in 2025 as a very big component of how consumers are making decisions on what to purchase, where to travel, and what services to engage with.
So what to purchase in particular, Michael, as somebody who is a total sucker for buying things on Instagram, how are you seeing things change in terms of where people are buying? Are there certain platforms that tend to drive more traffic for whatever reason? And is it leading people to go to bigger and bigger retailers? I know for myself, at least, one thing that's been exciting is it showed me a lot more independent brands.
Yeah, it's so funny. I'm a total sucker myself. I also fall victim to the Nordstrom's challenge. I have forever. The reality is that what you're seeing, I think, and what's so wonderful about what Instagram has done is it's been able to use intelligence that they have on us as consumers and shoppers to identify brands that are independent that we could connect to. Now, what we also have to realize, though, is that Amazon, Walmart, Target are also aggregating small independent marketplace merchants that are selling to us. So even though we're buying from Amazon, we're really buying from someone that is probably a mom and pop or a small retailer that is building their own online store via the Amazon platform, the Walmart platform, the Target platform, or the Shopify platform. And so I think, you know, you're seeing those two things have an impact, whether it is you buying directly from an Instagram. And largely the biggest trend that we've seen that are facing both seller and creator is the TikTok shopping revolution, which has just been extraordinary on every dimension. Obviously, we'll wade into politics if we talk about this, but what you're seeing there is a really, really strong movement for the creator to connect to the seller and have the consumer that is, you know, adopting this application and using it at a rate that is totally startling in terms of historical patterns.
Michael, unfortunately, we got to leave it there. Up against the clock. Really enjoyed this conversation. That is Michael Giacone. He is co-founder and CEO of Button. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice and my conversation, my poetry, you know.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back to our television and radio audiences. You're watching Bloomberg Markets. I'm Shonali Basak, and I'm alongside Katie Greifeld. We're going to talk about what's become a massive global story in the world of deals, in the world of autos, and that is Honda and Nissan taking the first steps towards combining. Honda taking over Nissan. It'll take a long time, but it's in the hopes of creating an automobile juggernaut that can survive aggressive competition from China and, of course, U.S. automakers. Bloomberg's global auto editor, Craig Trudell, joins us now to talk about what's the first steps of what could be a long and messy road ahead, isn't it?
It really is. I think this is a situation where these two want to set up a holding company, and they are calling it a merger, but it's really that in name only. As you alluded to, Honda is really sort of taking over here. They will take lead on setting up this holding company. They'll appoint the majority of directors, and this sort of proof is in the pudding in terms of these companies' relative market value. Honda's worth about 4 times more than Nissan is. And, you know, we're really in a position in Japan where Nissan has been in this, you know, long, slow decline since the company took down Carlos Ghosn and he was arrested. That was, you know, way back in 2018. And, you know, they've really been sort of lost ever since.
Well, with that in mind, that, you know, Honda is in a much better position than Nissan, that it's 4 times bigger than Nissan. Talk to us a little bit more about what exactly Honda gets from Nissan that it couldn't do on its own.
I think Honda, you know, has long sort of lacked scale as sort of a sort of second-tier car maker. It's a really strong company from an engineering perspective, and that's really what they're known for. But you know, I would point to just the word motor in the name, where you know they've really been sort of like long time engine you know, gearheads, right? And so they're quite behind in terms of the electric vehicle transition. In Nissan, you have a company that, you know, at least saw around corners years ago and you know, at least got off to a start toward electric vehicles with the Leaf at a time when, you know, Tesla was really just kind of coming onto the scene. But they've really sort of squandered that. And so I think in terms of the positioning of these two companies, I think this is a bet that, you know, combining and taking advantage of the benefits of scale potentially gives them a chance to ward off the rise of you know, Tesla in the U.S. and BYD in China.
Well, Craig, we don't have a lot of time here, and we're talking about 2 Japanese automakers, but of course have a big presence in the U.S. So what's going to happen to the Honda and the Nissan brands? What does this mean for their lineups and what we might see actually on U.S. roads?
I think the U.S. question is a big part of why this, you know, will be a challenging deal to close and take a lot of time. When you think about the likelihood that there's going to need to be a rationalization of dealers and franchise agreements in the U.S., these companies have a lot of overlap in terms of where they're strongest geographically and segments. So there's going to have to be a lot of thorny decisions made about, you know, who stays and who goes. And, you know, I think back to, you know, the days of Daimler Chrysler, you know, the sort of ultimate, you know, quote unquote merger of equals that was anything but. I think that's part of what we can sort of expect here is a really messy ordeal that's going to play out over the next year and a half. You know, and assuming all of that goes well, I think, you know, these companies will be more competitive, but there's a lot of questions about how exactly they get there and can they pull this off.
Craig, we thank you so much for your time. I'm glad you asked about the branding because I want to know what happens to the home of the Tennessee Titans. That is the Nissan Stadium, but that is for a later date. Craig Trudell of Bloomberg News, of course, oversees all auto coverage for us here. I want to bring some breaking news to you as well because we are looking at the situation in France as the premier's deadline for a new government is hit. We are looking at French President Emmanuel Macron appointing Eric Lombard as the new French finance minister. Remember, this is just ahead of a bid to pass a 2025 budget, a budget that has been already highly contested and very much the reason, a budget dispute for the toppling of the prior government. But now there is a new French finance minister that, of course, is now going to be Eric Lombard, and we will bring you more news from France as we get it. It's a lot of interesting things happening in global news into the holiday season, Katie.
Absolutely. Of course, we'll continue to follow this story with the French presidency announcing a new cabinet, a busy end of the year here when it comes to global politics. But let's talk about the global chip market as well. It's the subject of Bloomberg's big take, and that is Masayoshi Son's new next great hope is taking NVIDIA's AI crown, of course. And when SoftBank's CEO made a surprise appearance at Mar-a-Lago alongside Donald Trump last week, he did vow to invest a stunning $100 billion in the U.S. over the next 4 years. The president-elect, of course, then joked that perhaps SoftBank would like to double that target to $200 billion, to which Son replied he would really try with a wide smile. Let's bring in Ian King. Of course, he was co-author of this big take, and it feels like there's 2 stories here. There's one about the global chip industry and basically the race to take on and maybe actually take some market share from NVIDIA. And then there is, of course, the Son and the SoftBank story and how much, of course, Masayoshi Son needs a win here. Talk to us about the convergence of those 2 narratives.
Yeah, no, I think that's a good way to frame it. Massa, as you know, has been sort of trying to attach himself, or has attached himself to all of the big trends in technology over numerous periods. And he has obviously identified this latest one, which is obviously the great AI opportunity, as somewhere where he thinks he can kind of redeem himself after the sort of disappointment of the Vision Fund and all of the money that he raised there. So this is his focus. He's not necessarily trying to compete with NVIDIA, but he kind of sees it as more of NVIDIA opening the door to this kind of new age of computing, and seeing that as, hey, we can be the next one to $1 trillion kind of valuation. I think that's more of his focus.
Well, let's also talk about how he's doing that. And ARM Holdings, of course, they have a 90% stake in ARM. What is the vision for ARM and how it would actually fit into this industry alongside NVIDIA?
Yeah, that's absolutely the right way to put it. You know, we've got Massa's vision, his big plans, his ability to raise money, his ability to sell things, but the chip industry isn't about that. Of course you need money, of course you need massive resources, but it's all about experience, about having these core groups of engineers and these core groups of managers who know how to get this done. Something obviously that Jensen Huang over at NVIDIA knows how to get done. So ARM is going to be crucial if this attempt is going to get off the ground and make progress. And he has Rene Haas over a CEO of ARM to help him understand the intricacies, to understand where the roadblocks are, and to understand that you need more than enthusiasm and money to be successful in this business.
So, dare I ask, Ian, last time we saw SoftBank plow tens of hundreds of billions of dollars into the U.S. economy, we saw a lot of bubble